Hey everybody. Sorry about that. I was like coughing up my lungs for a second there. So I needed to mute. It's horrible. Uh, I got something in my back of my throat this morning and I just is not coming out. Excuse me. So, anyways, I think we'll turn off subscribers only today. If it gets crazy, I'll put it back on. Um, this is a price action. Good morning, DKS. This is a price action that I just don't. I don't think it's wise to jump the gun just yet because you can see why. Like, if you look at the chart on the left here, which is the 15-minute chart, this is the one that has a trend set up here, and you can see like this is a very evident. I wouldn't say it's necessarily super clear because last night was really weird. The way it came down and moved. This looks like a double flush and another double flush. So it's just definitely some shaking out this morning. And then the question is, which way are we shaking? I tend to be more, I know it sounds weird. I tend to be more bullish though for AMC when we shake down first. Yesterday we shook to the upside first, which obviously that's like more of a UT action or UTAD action. And then if that's the case, that's an if. If that's the case, then this would be a, excuse me, this would be like a LSPY with an upthrust, but aka a hook. But the thing is like a lot of this happened after hours, and so we also have to deal with a gap. We're going for that gap fill. You know, we've got other things that we have to kind of consider. That this is, yes, a cross. It looks to me like an apparent cross downward, if that makes sense, like an M cross down. I saw the cat ears yesterday, like right after we closed. I'm not going to try to find them here, but that's like usually what makes up like the first step. So you can see it here on the right side is that you get an M and then you get another M, and there it is. And there's your basic downward cross structure, okay? So you're pushing down, you're finding that you're making lower resistance as you go, and that was following an upthrust action. So this is problematic because a couple reasons. Number one, remember this is like high liquidity, so this is like the high liquidity center. And I mentioned that it's we're not done yet, so I don't want to say it's done, but it is it looks like it rejected there. And I have to mention that like this is a bad place to reject. This is like the high liquidity center. It's where we've been like kind of dancing around for weeks now, and we've kind of consolidated right around it. Anybody and their grandma could see that we've been bouncing right around 315. What you don't want, sorry, hang on, I had to pause for just a second. I need to cough one more time. I think I can get it out. Talking's helping, actually. Hold on. All right. I don't know if that helped, but I tried. I tried to cough it out. So what you don't want is you don't want a rejection off that liquid center. You want it to act as support. So if we were leaving this range to the upside, we would want to ultimately tap to that about that 315 level. That's roughly where I have it. You can see on this screen it looks more like 317. It's debatable. I don't really think it matters that much. In the larger range, it was 315, but you know all those orders are going to be like crammed in here, so we're talking about minutia now, and it may not matter that much. So you get what I'm saying? Like, so this would be an apparent drop with a hook. If it is, we're probably just going to head down towards that 280 mark. If for whatever reason this was just a shakeout down, because earnings brought about like a positive long-term angle, which is what I feel. I feel like earnings was good. I know we didn't get a double beat, but we did beat on revenue, which is good. And it was an 8% beat. That's pretty good for a weak quarter. That's a good beat. So for me, I'm like, okay, we had already talked about this. We already knew what was possible. We knew that 304 and lower, you could have a change of character, because all that was really required is that you just change direction, And what seemed to me here to be kind of obvious, as like these were distributional tops, like this guy right here. And then we failed to jump the creek again in that upthrust, and that just looks like, okay, somebody's shaking out their position. So if you had to ask me yesterday, and I was talking about it yesterday as we went along, but I didn't, during the stream itself, I didn't really talk that much, but I was saying that like these two upthrusts are typically not very good. But as soon as you drop beneath 304, there's always a possibility, even if it's a small possibility, there's always a possibility that you have a change of character. This kind of stuff happens both ways. And unfortunately, it's not one of those things that's easy to predict from a TA perspective, because it's literally a change of character. It's like an operator decides they don't want to do something, or they're not going to be able to do something, and so they change their mind. I think a lot of what happened around that Judge Zern decision, a lot of that was kind of premeditated, but I think some of that might have been a pretty massive change of character from some of the operators, because there was a lot of weird stuff that changed last minute on that, and that doesn't happen very often, okay? So while I say change of character, just keep in mind, like, that's kind of rare. Like, that would be like, oh, it's distribution, and all of a sudden, as soon as it kind of meets the criteria of that distribution, like dropping beneath the range, it has a change of character and then immediately reverses. And that's strange, because then it suddenly makes it look like, oh, was it even a change of character? I don't know. But then you got to remember, in this after hours action, this does look like a distribution to me, okay? These upthrusts happened in extended hours. But when we take off extended hours, I don't think this whole range looks distributive. So the whole range, which I think begins, it ends now, but it begins around April 23rd, because I think this was a reactive move, and I think we formed a higher range. To me, this whole range could still be an accumulation. It hasn't been determined yet. That's my opinion about it. Now, I do see localized upthrusts here and there, which would indicate that, yeah, they're trying to bring the price back down. Makes sense? This is kind of a recap. So if you're like, why are you not talking about the exact action right now? Well, I did talk about it. I just said that we really would need to get over 315. So right now it doesn't look great. We're losing volume as we approached here. We would need to definitely break out of that. There's no question in my mind. We'd have to be above that liquid center to have a true change. And so for now, it just looks like a big hooking action. So it would be like a shakeout. You could think about it as like covering. You could think about it as absorbing buying. And we will see. If it can get above, I think if it gets above 315 and 317, that area, and it finds support there, this is a complete turnaround, right? But otherwise, to me, this reads as just like a massive hook where we've dropped down really low, we're reacting back up, and we're testing resistance and support. So we want to, if you're bullish, you really want to pass this test right now. Does that make sense? If you're bearish, you probably want it to dump right now. You don't want it to pass the test. So the test is right here. We're right on it. And that makes sense for a number of reasons. We had the earnings yesterday with some very boring price action, and it left a gap, on the open. So it makes sense that we would need to come back up to some degree. I don't know exactly where we stopped yesterday. I'd have to look more carefully. But I'm sure there was a gap because we opened really low. So, anywho. As expected, volatility got a bit of a crush yesterday. It dumped quite a bit in after hours, opened much lower. So most of your calls and puts would probably be kind of squashed a bit. That's also kind of to be expected. I was worried about something like that going into a Friday. So I said yesterday it would be weird to not have a move, but it also might be one of these things where we don't have like a complete move until Monday. When AMC runs, we've seen that Friday can play a really big part in the run, and like a Thursday Friday move is not unusual. If I remember right, I think the March move was actually a Thursday Friday setup. The March 2022. Because I remember that Thursday, like Wednesday it dropped, and then Thursday it had a turnaround. So like, it's not out of the question. My thought was just that sometimes because of Fridays, the price gets kind of pinned somewhere. If there's not enough juice in the tank. So, anyways, so I don't mean to be talking in circles here, but just want to repeat because I know there's people still coming in this morning, and I started the stream a bit late. I was having like a coughing fit, and I just was like trying to get this crap in my throat, still in my throat. So I might have to pause and cough every now and then. So we had a dump. It looks like a downward cross to me. Like a cross down beneath this creek that was rising from the bottom. That was where we found support last, and we were kind of, you can see like we were repeatedly like pressing against it going into earnings, and then we finally dropped beneath it. Could it be a shakeout? Could it be a bear trap? Yeah, it could. And excuse me, the thing you have to remember is on the big picture, we've still only made a higher low here, and I think that's about the 50% of the range. That's like a 50% retrace at that point for the whole range. And I think that on the big picture, that's still a higher low. So you have to separate the two. Small picture, I already figured this was probably distribution or a distributive action. So I knew that we would need to come beneath 304. Like I figured that was a given. That would probably happen because I thought the local range was distributive. Once you get beneath 304, you could have a change of character where suddenly, like, instead of distributing and continuing to distribute, the range has a change of character. That means your operators have a change of character and they decide they're going to take it a different direction. Definitely a possibility. Right now, what I'm seeing mostly is volatility crush. And then we're seeing a little bit more of a rise in that volatility with this. But I think this kind of stuff just makes me feel like we're just being shook out, and I don't really have a lot to say about it just yet. So, you know, we're going to watch 304 and see what happens here. We've already come back up and tested 315. I think we rejected, pretty obvious there. We lost volume going into it, and then we're having a pullback, and that's not a bad thing necessarily. We just have to see if it finds support above 304, which is back in this previous range. If it can find support above 304, here's what would need to happen, I think, in order to have a good run here. We would need to come all the way back up and just start going. I don't think at this point it makes sense for us to come up here unless we're going to run. I know that technically you could have like what's called a UTAD, but this is kind of what that looks like to me, like an upthrust after distribution. It doesn't have to come back to the top of the range necessarily. This range is kind of going down. So anytime you have these cat ears, anytime, the expectation would always be that this right ear is probably going to be a compression of the larger thing, and it is. So that this looks like a whole sequence, like a double M, and you can see it. So the first ear is usually much more broad and clear. The second one, I've called it a four top before. Other people, as you already know, call it other things. The reason I call it a four top because of the double M shape, it's very distinct. And the reason that's important is because that's part of like that wave form pattern. And so anytime you have that, my expectation is typically that it's going to drop. But in the event of a bullish run, what should happen is that you will jump back into this range, and then ultimately, like, you do the breakout of the larger creek. The only real strong example that we have of this, other than like microfractals, is the January to May reaccumulation that happened in 2021. And really, it's more like February to May, February, March into May, because that's where the reaccumulation starts. That's pretty much the only main example we have of that. And all you can look at that and you can all check it out and see what I'm talking about. But the main thing is that it has to come back above this particular trend. So I know I'm being a little bit obtuse, math jokes, but here's the basic principle here. Okay, so if you're like, why do you think this would have to be bearish? And I don't think it has to be bearish, by the way. But if you're concerned as to why I'm talking in bearish terms right now, I'd already kind of mentioned this before, but this is typically what we see on the distribution, is this final drop produces what I would call like a hook. Remember? And that hooking action will often point towards a future top. Doesn't have to, but it can, especially on the micro, it does it all the time. And then the downward action is typically what's pointing you to maybe a future bottom. So if you're looking at this downward action, that's usually pointing you towards like a potential long-term creek that you're going to have to jump. So makes sense then that in order to have a change of character here, instead of distributing, and again, we talked about how this could be a spring-like action where you're coming down low, and this would be like what happened in March, and then you come out and you break out, and that's where the breakout was in March. And not surprisingly, in March, if you remember, this is where you got that SOS. The SOS was like tied intricately into the top of the range, of course, but also to this creek that was established on this run up. So right now we have that line. That's this yellow guy right here. That exists already. We probably also have this guy as well. I mean, technically this pink one is the big jump. So like the pink downward line here is the main creek. And I think that that one is probably the most significant. If I'm going to pick out another, I would probably use this top and this top. So right now, like the two lines that I'd be watching really carefully are this yellow and red line. So on my screen, I'll make them a little bit brighter. But those would be like your downward and upward creeks. And as soon as you jump that, either of those really, you could be in for a run. I mean, like it's that simple. So here's what the change of character would look like from a creek perspective. It would be us coming up above at some point, maybe today, maybe tomorrow. It would be us coming up above both of these creeks and then having a breakout above the main one. Does that make sense? That would have to be what would happen because you have to jump both of them. And the thing is that this lower creek, the red one that's going down, that one has more potential to cause you problems early on because that's the one that typically is where we find our spring. Does that make sense? So like if, for example, this just continues down, let's say it breaks down, it goes down to here. This is very much a possibility. You see how this could like easily bleed over into next week? If, for example, let's say it does what I think is possible. I don't think it's a definite thing, but let's say it goes down for a spring action and it decides, we decide we're going to spring here, not elsewhere. Okay, not down lower. Then this is probably what I would expect to see before like a breakout. Does that make sense? So like this creates the distance because ultimately like these are the last points of major supply, like sell off, sell off, sell off. So when we reach it again, that's where you'd have to make like the bigger jump across that creek. That's in the event that this is much lower, okay? In the event that this is significantly lower, let's just say it goes down to the secondary place where I think there could be stopping power. You could be in for a pretty nasty wash if that happens. I'm not seeing that right this second, but I do see the hook. It's not dumping, so maybe that's a positive sign. Volume has shrunk a lot on this pullback. So I'm not seeing like a seller dump here just yet. So I'm still kind of waiting. We're still kind of in the middle. We're not great. We're not bad. We're sort of just sitting here right now because this is a potential hook, but the volume to me looks good. It looks good for a possible bull run here. If bulls step in, see how all the volume's going down, including the selling. I'm not seeing a huge pickup in selling. So maybe that's a good thing. But let's say, back to this. Let's say we did come down, and we ended up coming down for a spring low. It's no different. It's just that now you're looking at this like way down here. And so this makes it look more like a mid-May, late May run. Does that make sense? And at that point, we could have a whole lot of conversations about this. But at that point, my expectation would probably be, I know my chart's getting really messy, would probably be like a pretty major move here to the top, and then a sort of a chop before you move again. That's very similar, again, what happened in March. So the quicker that, if bulls want to go down here for a spring, if this is a bull operator and they're like, hey, we want to go down for a spring, the quicker they get down here, the more time they're going to have until they hit that edge. That's where all the ascending accumulation nonsense would happen. My guess it'd probably happen pretty steep too, because they'd probably want to get across this whole area from about 240 up to 268. Okay. So if you're just coming in and you're wondering what the heck I'm talking about, my assumption here is, and you shouldn't really assume anything in the market, but my assumption here is this is a downward cross because that's what it looks like. Okay. So they crossed down. You can see it broke down beneath this upward trend. I mentioned previously that was kind of expected because this was a distributive top here. So my expectation was we were definitely going to be going down beneath 304 at some point, and we could possibly have a change of character. I say definitely, but you know me. I'm always like, well, blah, 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 blah. That was what I thought was most probable, just this local range. Now, on the bigger picture, I still don't personally think it's distributive. If you look at after hours price action, it looks distributive, like extended hours, because there's an upthrust here that's not present in regular trading hours. So it's debatable. I think that in regular trading hours matters more. So I think regular trading hours, there's not one. And so this whole range to me looks like, frankly, it looks more like accumulation. We spent a lot more time in the upper half here. And so, and on the big picture we have, that's this whole area here. We spent almost all of our time in the upper 50% after this initial move. We spent almost no time below that 50% line. That 50% line is around 290, by the way, which is really close to where we tapped down this morning. So when you look at the big reactive move, we have spent way more time above 290 and almost no time below. A spring would definitely be good because if you have a liquidity problem, you could go down there and get that lower liquidity. You probably find a lot of buyers. But they're obviously finding a lot of buyers up high because in the upper range, which goes from about 350 down to 280, we've also spent almost all of our time in the upper half. And all of these downward moves, yeah, we got the same thing on the upward moves, you might say. We were pinned. But all of these downward moves have been pretty hard spikes and accumulations. So if you think they're accumulations, Booksy, why did you think we were going to go down? Because that little micro range had a distributive top here, and that means that we're probably going to go below the bottom. And then we'll see, right? That's kind of like the change of character possible right down here beneath 304. So it's a little complicated, right? This is the nature of the market, is you have ranges that come down and down and down and down and down in scale. And ultimately you're looking, you want to see the big picture down to the micro picture so you can kind of understand the price action. So on the 1 minute, it might look more distributive. On the 15 minute, it might be like kind of not sure, you know what I mean? And so on and so forth. So bottom line is big picture, right? Bottom line is we have to cross the major creek, and we haven't yet. So regardless of whether or not you think this little area is going to rebound and go up or drop and go down, it really doesn't matter until you jump over, let's just say about 330 or so. So if you're just kind of wanting to know, like, what's the bottom line here? Like, how do I know that it might be running? Probably around 330, 340. That would be a decent place to say, yeah, it's probably running. And I say probably because you have to watch out for that upthrusting kind of fake out, the head fake. But as long as it finds support above 330, it's probably running. Okay, so support is key. So for me, I'm like, okay, right now I'm seeing a really low volume sell-off after this pushback up. We definitely rejected off of that 315 area, but I'm not really seeing a lot of selling. So I'm kind of curious as to what's the deal. This could just be a shakeout. And if buyers are ready to go, we're not going to go down for a deep spring. But you got to see that buy-in. And unless you see that buy-in, we're not out of the woods yet, as they say. Does that make sense? Okay. I'm not looking at things like RSI. I do have, on this time frame, I've got like, this is the 1 minute, but this is your, I think 180 day, or 180. So it's whatever. This is not the most important, but you can see that, it does represent on the 1 minute an important resistance / support, as a moving average would, but I don't have it on this one yet. And I don't think we're anywhere near the large scale ones. I think 30 minute was probably the most important one, because that's where we were chopping. So I can turn that one back on. Book's putting in the work as usual. I wanted to cover the morning because I knew yesterday when we kind of left off, I wasn't sure, and I left the stream a little bit early, and then it dropped, and I was like, oh yeah, there's a cat ear, so we're probably going to go lower. And then we did in pre-market. That kind of a move would suggest that, this was indeed distributive and it was heading lower. But oddly, they crushed all of the puts as well. So it wasn't like, it was just a volatility crush, I think. I think a lot of it it's indecisive. Does that make sense? Like, there's no easy to discern. Even though, yes, this looks like a hook. I know it does. And it reads that way. I don't think the market is 100% on this. So that makes me kind of wonder. Anyways. What was I talking about? Oh yeah, the moving averages. So this, I knew that we were probably going to wrap around the 30 because we've done it the last 2 earnings, and now we've done it for 3 earnings in a row. And it doesn't seem to be that any other indicator matters that much right now. The hour is probably above us, and I think that'll be really important. But I think this 30-minute, the fact that it's narrowed into like that liquid center is probably pretty significant. And that liquid center at 315 is roughly like 1/2 of this range. So everything right now kind of revolves around this 315 level. There's just a lot. Makes sense? You're like, clear as mud, Booksy, clear as mud. All right. I'm going to watch that as we go. I wanted to switch over really fast. I know a lot of you guys don't care about this, but I do. MPW is Medical Properties Trust. It's a real estate investment trust, so it's REIT. And they announced their earnings pre-market. So it's a really bad miss here, but then they beat on revenue. It's kind of weird. Anyways, we'll see. Same deal. I'm kind of like watching this one. I think it looks a bit like a hook to me right now. And we never got the gap fill low, so there's that. I don't know. Not sure about this one yet. Sitting at 0%. I thought we were going to come down and get the gap fill and just kind of bounce down here around 405. But it's taken a really long time to get there. And it looks like we got a volume pickup too. Of course, that was before the earnings. I don't know. I'm bullish on MPW. I want to see it move to the upside. I think we're in for a pretty big move on that. I'm just going to wait on it though. There's nothing really to say right now. It looks so-so. And I don't know. Like, I want to see if it comes up and breaks above like 5. But I'm also not really sure that it... We'll see. I'm not sure it'll survive that. We'll see. Like, going all the way up there. We'd have to keep the volume. IWM... I don't know. It looks like I'm clairvoyant or something here. I don't think that that's usually the case. So let's just... I don't think I'm usually able to tell the future. I'm humble. I too am extremely humble. I don't know, man. So this just looks like a gap fill. I guess on IWM, if this gap fills and we see a drop off, it looks like a rejection and a turn on the RSI. So I still think there could be some more downward action. The reason I was joking about seeing the future, and that was just a joke, was that this is what I had drawn out as what I expected, and it's looking like that's kind of what we're seeing. I don't think we ever really got that gap fill, or we got really close to it. Maybe close enough is the word. But I feel like we didn't get it. Because I remember measuring it out, and it doesn't look like we hit the mark. IWM is important for us right now. It does represent a pretty significant I would say catalyst for some of the stocks that we follow, especially like AMC, smaller cap stocks. Are they ready to move finally? You know, most of them have not been doing very well, or they've been in a low accumulation phase. They've just been kind of sitting there. Very few small caps have had really great price action this last year, at least on my list. I mean, there's probably some that have, but you can see like we are still kind of chopping around on this apparent SOS on IWM. We haven't actually broken out yet, and we haven't gone up to all-time highs yet. So small caps have been very sideways, if that makes sense, on the whole. This is the closest we've been, and obviously now we've had this big pullback. I don't really like that there wasn't a huge volume pickup after this pullback, and I'm wondering if we're not going to get that until we see that retest of like 199. And that's why originally I thought maybe we're going to come back up or hit this head and shoulder level, which we did. We got there. That was a good call out, I guess. I made some money on that, so I'm happy about that call. And I think that from that point, I was just kind of waiting to see if we went all the way to the gap, and we did. We got pretty close. Then I said, well, we might see it pull back and hold support here. And the main reason is because of this trend. Technically, it broke out of this little, very, very short term, but this little short-term trend down here that was uptrending. So that could provide support, and it did. It didn't jump back over that. So we'll see. You know, it ain't over till it's over. That's the famous saying. And I don't think that at this point you could say that, like, oh, it's finished. It's just kind of sitting around that head and shoulder top area. That's a, right now, that's a critical support and resistance point on IWM. So there's not much to say there either, unfortunately. You know, if I'm looking at something like the RSI as a main indicator, I was saying that, like, it kind of looks like it turned down, and you could see how it could reject, and we could start a downtrend. But, like, nothing's broken out yet. Like, this doesn't look like the trend is loose, but this is a loose uptrend, and nothing's broken that uptrend yet. So if you had to ask me, like, what do I think that is? I think it's our very obviously famous at this point, right? Double M cross. So part of me thinks that this is probably a jump on RSI over, and I'm drawing it very loosely here, over another downtrend that we had, which was this divergence that happened when we were going into the top. If that's the case, then I actually don't think it would turn down. I think we'd probably break out. We'd have another go at it. And that's why I thought maybe we don't even go back down now to 199. It could be later. But maybe we don't ever go back down. Because really, like, if this can hold, you will have a downturn, but it would definitely be way higher. I can't remember why I drew this 208, but I'm sure there's a reason. I don't usually put stuff on there. It must have been a target. So maybe that's the target I'm looking for. I don't know. That would be possible. So if we can see this as a double M, maybe this guy goes up, makes a higher high, but the RSI is lower. And that, just like here, could indicate like a deeper pullback. And then we'll see what happens, you know. I think support above 204 would be really important. It would kind of negate the idea that we're going to do a head and shoulder. I think that's a very strong possibility. And then I had mentioned also that this is an S-curve. So an S-curve setup, I should say. We don't know for a fact it's an S-curve yet. But that's the 50% mark. So it's convenient. But if you go from bottom to top of the channel and you use that lower creek as your guide, this is right where we would be parked, right here at 203, 204. I mean, it's right where it needs to be for a really simple S-curve to the upside. And an S-curve, if you don't follow, is just that kind of action where you basically make a 50% move, you move like half the distance you want to go, and then you're reconsolidating, and then you move again. And that's pretty common with like flag actions or things like of that nature. That's actually one of the targets. If you go to Bukowski's website and you look at his targets, he always gives you the math target for like, here's the probable outcome target. Like out of 1,000 of these situations that I've studied, here's how often it meets the target. And here's the main target. So it's like a grouping. They have like a deviation, and he gives you like, where does the standard deviation kind of lie, and how, and with those price targets, what's the average price target basically? I don't know why I said standard deviation, but he he does that, but then he also gives you like other situations, and almost always on like a bear flag or excuse me, on a bull flag or a bull pennant, there's always a secondary option, which is that 50%, which is like, it goes an additional, so it's like a double move, because it happens so often in the markets. And that's when I talk about S-curve, that's usually what I'm thinking about. So that S-curve, in my opinion, goes up to this creek right here, and it intercepts the top. To me, that's like basic sine wave. I did it here as well, going down, where I did like a 50% of this. And just, again, don't take my word for it. Just take a look, bottom to top, and then look at the 50% cross. Where is it? Go from previous top through that 50%, and you get and I actually went a little off. This should be higher, which would bring this down. But you get the price target that we're probably going to come back to. That's just sine wave mathematics. So yeah, makes sense. So like that idea right here is, I'm playing it forward, and I'm saying that if that's the case, and I think it is, assuming we jump the creek, we'd have to actually jump that creek around 210. That's the main one coming down from all-time highs. Assuming we did that, we would definitely, in my opinion, be going up, but it would probably not get there till about the end of May. So there's a lot of time between now and then, and that's why I wouldn't put it out of mind that this could have a push up and then come all the way back down to like 200 and then go. And so how would that pan out, if that's the way it happened? This is why I pay attention, and you guys will probably already know this, but this is why you would pay attention to lower trends. So that's a pretty steep trend. I think it could indicate one that we kind of use as a overall trend later. So this might suggest that within about a week's time, If you did push up, you could have a big pullback to 200. There's a lower one, so you probably can't even see that on the chart. We'll go back to AMC in just a minute if you're kind of worried about it. But this is that lower trend. We haven't tested it in a while. So, you know, it's not even like that hard of a question in my mind. It's kind of like, well, let's say we push up to 207. I'm personally probably going to just go ahead and exit my positions because I think that at that point, what's most likely is a pullback that's pretty steep. I don't think it has to be that way. There's always the outlier, you know, where it just kind of holds at 204. But that's what I would expect. And then a buy back in, and then it would go. And that would give you a trend upwards to follow, a trend downwards to follow, you know. The other option is a much slower move. And that I would use these 2 points here. That is significantly slower. It drags everything out by like weeks. But that's one that I could also see as a possibility because it is, I mean, it just is. Sometimes that bottom doesn't really count, that bottom as a selling climax. And it's this bottom that matters the most because it's where you found support after you kind of jumped the original downtrend or the early, actually the steepest downtrend. Sometimes that's the case. We've seen that a few times on AMC where that plays more as the bottom. And it's just a simple example of, you know, what could be. That gives you a different trajectory. It gives you a different bottom channel. So that's a bit slower. And that could be more of like you hit this and there's more of a distributive top and then it takes a little longer and it's more like end of May, right? And then you get a bigger move very end of May going into maybe June. That seems possible to me. And I'm of the opinion that this is probably pretty bullish. I'm not of the opinion that this is like super bearish. So does that make sense? So if you're thinking like, well, I think small caps are going to dump, this is not what you would see. You would see it drop beneath here. It would drop beneath that 199 and hook. It's pretty straightforward, actually. You'd basically see a distributive action here, and then this would become a giant head and shoulder. Straightforward. I think the head and shoulder is there to tease out shorts, personally. So I think that we will go up. Maybe we go up again. That's kind of I don't say we will. I think it's possible just based on this structure here that we see one more big push. The RSI is divergent, and then we shake out back down. And that's where you'd start seeing people talk about it's a head and shoulder being presented. But remember, the head and shoulder can't break down anyways until way down here at like 192. So even if it were a head and shoulder, which you could say it's setting up for that, you couldn't say it is for sure yet. That's why I marked this off, this previous level, this high here at 205. It's a critical level, and we're sitting at it right now. And I figured we'd probably come back up here, and we did. Even though you should mark that off, there's no confirmation of a head and shoulder breakdown at all. There's no confirmation of that structure until you break the neckline and you have that hook, period. Like that's the buy-in point. And until that point in time, anything could happen. So it's really silly to say it's got to be a head and shoulder. I just know that that's the setup. That's a apparent setup that could be at play here. I'm watching to see this top until that point, okay? So, hey, good morning, Uncle Johnny, Thomas, John, David, John number 2. Maybe you're John number 1. Gustavo, thank you for not leaving us like Ants Trades did. Why did he leave? Where did he go? Looking at the 1 hour chart, we're creating a higher low, right? Yeah, I mentioned it earlier. Yeah, this is still a higher low. I think my thing is like, I like the mise en place. Mise en place, the French term for like everything in its place. They use it in the kitchen to talk about having an order to your workflow and doing things in a way that makes the most sense. That doesn't really apply as much to the market, but I mean, you could apply it anywhere in life. the reason I was mentioning that is because I like the idea in terms of like when you're looking at time frames, you want to sort of put everything in its place. This is a little hook of a trend. So it's a little hook of a big trend. So like it's important to note that while it did make a higher low, and that is a definite yes, of course it did. You know, it's evident. That's correct to say. While it did do that, it's also making a hook here. So there's not really, if you were to just come out and say, if I came out and said, hey, we made a higher low, that's good. That doesn't really tell you the whole story. That's just kind of one narrative. That's me saying, hey, made a higher low, it's still bullish. Well, yeah, but it's also been making lower highs constantly. Now, if you were just being like a bear flag guy, you're like, I think it's a bear flag. Okay, well, cool. You know, you could be right. It could be a bear flag. We could be in for, again, that spring around 284. And I'm not against that either. But the range is not just one way or another right now. It's on the micro, it was bearish. I'd already kind of said I thought this was a bearish top. So I figured it would come down. That seemed most probable to me. That's why I marked off these a few days ago. It seemed likely because of this top. All right. Looks like it's going to try to distribute into earnings. Earnings, in my opinion, was pretty positive. So I liked everything except for the debt reconsolidation, the debt negotiation, rather, reconsolidation. Consolidation is not necessarily what they're doing at all. But they're renegotiating the debt. And I'll talk about that in a second because they actually did address it in earnings. But I liked everything about it, though. I thought it was fine. And I thought that there was a very positive, like, we're going to be in a really good place the next 2 quarters. That's what I heard. Like, our F&B sales are way, way up. They're blowing off the top here. They focused on the positive. Adam Aaron didn't talk trash to retail. He didn't talk about things that he can't control. He didn't spin the narrative about how we're not there yet. Oh, we're just not there yet. We're not making it. Everything he said was like optimistic. Like, hey, here it is. We're starting to see sunlight. The sun's coming. It's going to be good. It's going to blow off blow up the box office. Like, we're seeing those movies come in. Everything's looking positive. I mean, maybe that's not always the best thing, but from AMC's CEO, that was very positive. I felt very good about that. He has not been that way in a long time. Like, everything he always says usually is, well, it looks good, but gotta admit, the pandemic sucked and it hurt us. I was like, gosh, just stop saying that, well, we still gotta, deal with this, deal with that. Even in answering questions about the debt consolidation, debt renegotiation, he was positive. And that happened literally while I was exiting the stream. As I was exiting the stream, he started answering that question because I was like, well, I guess they're not going to talk about it. And then somebody asked about it. If you missed that, there's not really much to say. But what he did say was, it was kind of like, of course we are doing this. He said, we are in negotiation. We're always looking to see if there's ways that we are going to be able to extend our... And someone in our Discord brought up the fact that it may not be until after that offering is completed for financial purposes. But he said there's just nothing to report yet. So we were right. Like, basically they didn't mention it because they're still in negotiation stages. But he was saying, like, in effect, I'm paraphrasing, but he said, of course we're looking at that. Like, so some of those that are due this year may not actually be due this year. They might get them extended. And we may be very well waiting for that news. I don't want to say we definitely are, but we may very well be waiting for that news to hit, before we see something really major. And it could be a week from now, we get that news and we're in the perfect spot. And then we just rock it, I can't tell you that. I'm not able to see the future in that way. But that's typically how it happens, right? It's like, okay, there is going to be good news, and then it's not at earnings, but it's shortly after or whatever. And unfortunately, lately it's been bad news, which is like they were waiting around for weeks and weeks for that dilution announcement again. So this to me looks like mostly bearish right now, but that's because we dropped the trend. I talked about this a few minutes ago. Ignore this red line here, but this is the basic structure. Ignore that long-term red line. I'll pull it up a bit. This is the basic structure of most cat ears. If you're going to be bullish, typically this is what happens, is that you drop off that trend. So there's usually a trend in the cat ear, and then you drop the trend, you hook, you come down low to wherever your spring action is. If you're going to get a spring, this is assuming this wasn't distributive, and it could have been, right? So in a lot of cases, this is distributive. I don't personally think this is. I think that it's meant to look that way to some, because there's definitely marks here and there of like we're pushing the creek and we're rejecting. But on the whole, I'm not seeing the setup as overall bad. I'm seeing it as mostly trading in the upper 50%. You're trading high 50% of this major move that we had, and you're trading high 50% of everything else, of that reaction. So like everything's trading high, which is actually good because that's more typical of an accumulation versus like those U shapes where you're trading low most of the time. Clearly, like this was going to be a point of contention going into earnings. We knew because it was constantly dipping down to near 304, and that was about the 50% retracement here. And I think that that's apparent. Like you don't need me to tell you that. You can kind of tell that it was reacting, hovering around the 30, hovering around 315. Dropped, reacted back to the upside, and now we're just kind of waiting. And the reason I'm saying like I would have to just be cautiously bearish right now is because it hasn't made a move just yet that's overtly bullish. An overtly bullish move would be us coming back up above 315 and finding support and then jumping this creek, which is essentially like, in my opinion, it's like this yellow line. So it's pretty high. It's 20 cents away, but it feels like a forever when you're in these kind of modes. So we would need to first find our footing. And once again, we're back beneath 304. So that's not the greatest. You know, you'd want to find support at 304 before you move up. So if we're dumping again, now we've got to deal with 304 as resistance. And that was an area that was protected before earnings. Like going into earnings, that was an area that was being guarded. So right now I have to just be kind of by default bearish because there's nothing here that says like it's running just yet. A change of character is possible if we continue to make higher lows, and we did eventually break over that 320. I'm really bullish. Okay, like if we came up here, the 320, I'd be like, yeah, it looks good. But it'd have to go, you know, like you have to make the jump over that creek. And I was saying like, typically this is what we see in that setup. So I'm sorry, I went in a big circle there, but typically this is what we see in that setup is that you end up with a hooking action here. And then if it's a spring low, we don't leave until we exit this creek, which is that cat ear line, four top line. Other people call it other things. That's pretty typical. And so if you look at March, that's exactly what happened in March. And then that uptrend line ends up being right around where you're, not always, sometimes it's like even steeper, but it depends on which one you grab. But anyways, a lot of times it ends up being around the 50% where your SOS is. So it ends up being like right here, and then you end up moving another 50. That's the slingshot, basically. So at this time, I'm kind of defaulting to bearish because of the hook. And that doesn't really surprise me. I'm not worried about that because I also feel that this makes sense, like that this would have come down first because of this area. And also maybe we're going to go get that spring. And that's another thing you have to keep in mind is sometimes down, it may seem really bad, but sometimes down is really good. Because if this is overall accumulative and we go down for a spring, yeah, it might stink for the few that got in early. And I'm in a leap, for example, and that leap got kind of crushed during earnings, which is expected. It might kind of stink if you're in that position, but like long term, that's a really positive thing. Like a spring is positive. So I'm not saying everything has a spring, but I think this particular range to me still reads as a possible accumulation. Like it's getting ready to hit that low that it needs to hit and then basically rip to the upside. So I think it could be very, very positive. My only real question at this point is how long does it take? And ultimately, like, are we going to see this kind of meander for a while? You know, sometimes with these actions, if it takes a really long time, this did happen in March. It also, you can go back and look, it's happened in 2020, which is like you got to about the halfway point and it did react, but it doesn't like break down, or it breaks down instead of forming like a spring here. And then you end up with this really kind of slow burn to the downside. And instead of breaking out, it just like tanks. And then what stinks about that is that you might actually get a spring action, but now you've created like a longer window for the rest of this price action to happen. So it ruins your timing. And that's very different than like what we talked about earlier, which is, let's just say, for example, this was really quick and it did go all the way down. You know, timing could be much more aggressive and you could see it take off significantly earlier. I mean, that could be weeks earlier in terms of, or at least a week earlier, in terms of a spring action. We're not there yet. If you're one of those like hope against hope kind of people, you know, I would just say like watch the 1 minute, because the more like information you have, the better. And right now it's generating a whole lot of questions in my mind. But to me, like this is another cross down. If it can find support and push back up, you know, maybe we can get a move. This is kind of like your best shot here is like finding support above 3 and then pushing up to about 324. The good news about that is, hey, if that happens, I get to throw the rest of this out the window. I don't have to worry about it, because if that were to occur and we make that jump now, it's going, man. I think as long as we found support above like 330, I think we'd be in a really good place. Like we could be heading back up to at least 350 and then from there taking off. Really genuinely mean that. The end result of the cat ear is typically straightforward, but as soon as you jump across this creek, it's kind of game on. It really is. So they've given themselves at this point, I'm talking about bears, they've given themselves a lot of room to operate. They could technically take this sideways till Monday and then dump it. There's plenty of space. I think that's the name of the game. It's basic geometry. It's rise over run, or in this case, you know, decline over run. By creating that angle and then creating a steep drop, you now have a lot of time to go sideways before you make a decision. And that's frustrating, but that might be what happens, you know. Now, a lot of people always critique me and they'll say, like, at this point in the stream, they'll say, well, so you don't have any idea what's going to happen. And I would just say, look, the market's really random in some ways. From a kind of a helicopter point of view, it can seem really random. I think that this is not random to me. Like, this looked distributive. I figured it would probably drop beneath 304. So I said before earnings that this seemed most probable to me, that we were going to get the drop beneath 304. I actually got into short-term puts. Now, those got crushed, you know, which is kind of funny because everything got destroyed, not just calls. And I find that to be a little bit humorous because it's kind of one of those things of like, well, you got the price action right, but it doesn't matter because your operators did so much shaking out that they just smushed everything. And that stinks, but it's also, understandable. And I think that's not the end of the world, in my opinion. I think it still could be downside here. But I mentioned that, like, beneath 304, you'd have to see some kind of a change of character. That would be like what we experienced this morning if it were to pay off in a higher low and then it broke back above this red line and this yellow line. The McDonald's lines, if you will. Okay. You can see why. I mean, that's a jump over so many things right here at this point. So I don't really feel like I don't have any idea what's going to happen. That's not what I'm saying. Like, I'm trying to present you all with different scenarios so that if those things occur, you're kind of aware in the event that I'm not sitting here like talking about it. Oh yeah, I remember Booksy said that if it comes sideways and then dumps again, now we have to deal with that longer time period. Or, oh yeah, if it comes sideways, it doesn't mean it's going to go. It could be up or down still. Like those gives you a window to kind of view things. And that's sort of the purpose of the channel is more educational than predictive. And sometimes the predictive is like spot on, but that's just because, like for IWM, like it's sort of like common sense, when you're looking at some things and you're looking at this and you're like, yeah, I think it's going to go back up to that 205 and near that gap. Super easy to predict that, and then it happens and you're like, okay, so it looks good. And then the pullback to this particular level makes sense because of the trend. You know what I mean? Like those are not complicated predictions. They're very simple. And they're the best kind of trade because they're not that confusing. When you're in a position like this, my thought on the big picture is it looks like it hooked. And on the small picture, I'm kind of waiting to see if there's a kind of change of character around 304, $3, above 3 basically. And if there is, we could see it turn around. And if not, then I'm going to just say it's going to continue that same price action and probably head to 284. Like that's probably where it would go next. Not complicated. It's the previous bottom. Makes sense. It's also like, potentially like a low in this range. It could be a spring action in this range, the larger range. And then if it continued to break down, what then? Well, if I'm wrong about that range and that after hours price action back here on April 26th is included as part of a UT type action, then my thought is that, yeah, it could break down there and then you're just going to go to really low 230s. I still think it's very possible that that's a full-on, still could be a spring-like action. I really do think that, mostly because of this, the way this is traded is very different than this. Yes, we've spent higher percentage of time after the bounce in the upper 50% here, but then as soon as we got up here, it was like constant lows. Like we're constantly spending more time in that like lower 50%. See that? But that's not the case here. We're spending way more time in that upper 50%. And that's just one indicator. It's not the only one. The volume being drastically different also is a big deal to me. But then going back further, you look at something like this and it's similar. It's like once we got into the top, we did not do a lot of exploration high. It was very much rejections. Like we set up a head and shoulder like right on that 50% line. And it's frustrating, looking at these things and saying like, well, yeah, but we thought it could go. Well, yeah. But at the same time, I've been trying to be really careful about making sure that folks are aware that like there's always a confirmation. Like you do not have to enter a trade before confirmation on a guessing game. Like you don't have to do that. There's always a confirmation. Our confirmations right now are I've mentioned support at 3 would be a gentle confirmation. It's not the only one. Then you'd have to go up and really you need to find support over 315 and break this creek. And that for us is going to look like probably going into Friday or Monday. I'm just kind of guessing on timing. It could be today. I don't know. It could be crazy Thursday, But that would be us over 330. So I don't feel in the slightest like an anything can happen kind of mode. I'm more of just like right now I'm short term feeling kind of bearish because of this hook unless something changes. And that's where I'm at. Okay. I'm sorry. Hopefully that makes sense. I haven't really been looking at anything else this morning just yet. I did re-enter NU. I played from $10 up to $12. That was a pretty decent little swing. It was just shares. And I think NU is going to come back down to maybe near 1150, maybe 1130. That's like a 50% retrace, and possibly a 786 at 1088. But I think it's more likely about 11. I think it's possible this can have a pretty substantial run if it can find support at $10 or $11. And I think at this point it's at all-time highs. If you're wondering why I'm covering this, I really like NU. I played it way back here from like bottom up to like 6, and then I didn't play the rest. I think that for the most part, this run is probably finished, and we might be in a consolidation phase for a while after this, but I'm kind of optimistic about it. So I feel like this could have still some pretty big moves left in it, just to see if we can make new highs. It hasn't really done that. It's just barely come above. So that's just one that I'm watching. I did play NNOX. So I got in at a pretty good time. Somebody had mentioned, at least for the current trade that I have, somebody had mentioned it on the stream, and I got into NanoX imaging pretty low. I want to say around 9. And it's up to, 990. It's a decent little increase for that trade. It's going into an earnings in a bit of a strange way because it's kind of going into a creek cross mode. So if it can maintain this, I think that jump, you could have a pullback to like 950, but I think that jump is pretty significant. You might see a decent move, at least up to about, I would venture 11, but this could be a really good trade, is what I'm trying to say. Back up to about 11. And short term, that's a pretty decent little profit. Even if you got in, let's say it comes back down to 970, that's 17%, 16%. So it's a pretty good one. I'm kind of cruising through some different things right now because I just want to take a look at them. I haven't checked CubeSmart in a minute. Still not really much to say about this. I feel like that's a pretty decent. It's not horrible. I feel like this could be in for a gap fill up to 46. I haven't traded it yet. I'm waiting. It's everything right now is it's undervalued. Like this is another REIT, and it's trading below its intrinsic value. And that's an aggregate kind of thing. Like almost all the analysts who would look at this would agree that that's the case. I'm waiting to see if it comes back up to 46 and then breaks out. I think this could have a pretty substantial recovery move. Just like everything else in the market, it's sort of just, not everything else, but like a lot of the small caps, it's kind of just sitting here. It hasn't really made its jump just yet. So we'll see. It would need to push out above 42 and it could have a pretty big move, but this could be a very substantial trade as well. So it's on my watch list. Charge point's probably down. Yeah. That was to be expected. Charge point is an EV stock. There's like a handful of those that, are sort of trying to get a bit of a traction right now, I guess you could say. And it made a run for a gap, pushed above the gap. It's teetering right now. This is kind of your main creek, this little space. It's teetering right now in that space, but I actually think it would do it a great benefit to come back down to like $1.50. Unfortunately, there's a gap beneath there, so that could drag it lower, but $1.56 or so is where that bottom should be on a retest. You might get a retest as high as 162 and then continue. the point is that it doesn't really matter how that happens, if it's perfect or not. Right now I have it drawn out this way. That would be cool, but it doesn't have to be like exactly like I drew it. That would be silly. But I think that ChargePoint is kind of like some other stocks we've been following. It has a huge buy-in here. And if it can hold on low volume in a reaccumulation, I think it's ready to go. And you might see a pretty big, significant break first to like 236 and then up to like $4. That's very, very large moves. Ultimately, that's like 100%. So that could be a really strong, strong trade. I think I covered all of them. Oh yeah, GME. Well, I'm not sure which chart had my thoughts on it, but I guess I was thinking it was going to come back down here. I said I'd prefer if it goes ahead and breaks out of this and comes back down. I said I did not think it was going to continue to run because that would be weak. And in my opinion, this is like the beginnings of a possible big move. So you don't want it to come high too early. And that was my case. I was like, yeah, you know, a lot of people want it to run, but if you cross this threshold too early and it's not ready to go, that's weakness. There's a lack of control. Usually that's sellers driving for a distribution. So right now, I'm actually pretty happy with this price action. I know a lot of folks are going to look at this and be like bummed out it didn't just keep going. I think it's fine. I don't know exactly how low it's going to go to stop. I believe it could come as low as this bottom trend here, and that could take a while. So just, you know, keeping it real, this could take a good month. I mean, it's not out of the question. In the event it goes faster, it's not really any different than what we've been talking about with AMC earlier, is you're just going to start sort of working out this range. So you would look at this and you'd say, okay, well, when it crosses this creek, there's a chance that it's going to run up, but this red creek that I drew, but it even then, like, it could be forming something much larger. So you have to just kind of be patient. So for example, like if it came down really low, let's say it did have a big retracement down to like 15, and then it comes back up to like 1560 and it breaks out here, at least short term, I would be bullish up to, you know, $17 or $16.90. I mean, those are things that you can use to help kind of gauge, you know, back to the previous top. It's pretty easy to see why that might happen. But then from that point forward, you're waiting to see if we get an SOS. An SOS is you're pushing over the top of the range, and then you're going to see if it has, of course, at that point, a backup to a creek. They don't always have a backup to a creek, but they can. So yeah, my initial thought was we'd probably come back to 15. If it happens sooner than the way I've drawn it, then good for us, I guess. There's not really any, I mean, I wouldn't be like upset or something. I think the reason I thought it might happen later was this trend, which is, I mean, I guess it could come below 15, but that's where that intersection is. And I think this is leading into like an earnings that's over here. If I'm not mistaken, I forget exactly where that was. Yeah. So maybe there's not a simple answer for it, but I'm watching 15. That's kind of, I guess, that is the simple answer. Yeah. This is unusual because it jumped back into a trend. So this is like that breakdown. I talked about that cat ear thing earlier, and this is the cat ear. And you can see one ear, two ear. And when it breaks back up, there's one ear, there's the cross, there's two ear, and when it breaks back up above that trend, it has an opportunity, if it finds support, to just go. That's the trend that you need to break in all of these schematics to really just see it take off. So I'm still feeling really bullish about GME, but I felt like the most bullish thing that could happen here was that it come back down and find support. I already know that a lot of the chat did not agree with me because they were like, no, it's going to run. It's going to go to, $20 or something. I'm like, I don't know. You trade what you feel like you need to trade. I looked at it and thought to myself that would not be very bullish if it advanced too soon. So I would be happier if the RSI cooled off and it chopped for a week or so and then advanced. I think that you'd be in a very strong place, potentially. Yeah, AMC is just kind of chilling. I mean, I'm curious because there's not a lot of hardcore selling right now. So if your short operators are still driving the price, they may just be accumulating short positions as these little mini upthrusts happen. Some of this buying is getting absorbed pretty quickly right around 3. You can see on the volume, there's quite a few buying candles that are just kind of being absorbed. It looks like 305 is acting as a pretty strong resistance. So there's that. Yeah, that's already been checked. That's been checked. That's being lost. Let's go out. Man, this whole thing just feels like a big shakeout to me. So, fun times. You just have to remember that sometimes you have to go down before you get the big up move. And I know that's not always appealing to folks, but it's not always a bad thing. A lot of times it's an opportunity to get a good price. If you're convicted, or if you're feeling confident about a bullish price action and then the stock seems to be going down, you shouldn't immediately second guess yourself. You should at first just look at the range and decide whether or not it's actually broken any of your trading rules. And if it's not, if it looks still pretty healthy, it may just be that it's a pullback, And sometimes that's exactly what the stock needs to get some more liquidity and then get a really big move. And I'm a big fan of, I may not always be great at it. Like there's been times I've messed up, but I'm actually a really big fan of trading against the trend. I really like that. I know it seems weird because that sounds like really backwards, but there are a lot of trading methods to kind of determine whether the trend is really your friend or if it's actually something that's kind of setting up for a reversal. You guys are like, trade against the trend? That's the worst advice I've ever heard. Not so if you're like, for example, if you're trading like a flag that's going down and you're trading bullish because you think the larger trend, again, everything in its place, you think the larger trend is bullish. The present bearish action may not actually be that bearish. It really just depends on your perspective of things and how you see these reactions working out. I know I'm looking at MPW right now. I know that this is not one everyone cares about. I'm trading it. I think we're going up to $7. It's basically a head and shoulder structure. And once it breaks 522, I think the target was at least 630. I could double check that. So let's just say 135 plus some change. Yeah, it's roughly right around here at like 660. It makes sense because that's a previous support right here, this little pocket. So right around there. Yeah, that makes sense to me. So that could be a really substantial move to the upside as well. I mean, that's a 50% move. You have to remember, like, there's way more than just AMC. So if you're somebody that's only here because of AMC, like, I know it seems bizarre, but I think the whole market for smaller cap stocks is kind of groaning to move forward right now. It's having trouble finding its footing. I think a lot of it might be shaking out these shorts that have been driving the price, and just making sure that the buyers are ready to go. And it could take time. It's not like an instantaneous thing, but I do think that there's a need for small caps to kind of make their move. And we've been just kind of waiting for a long time, and nothing's really happened yet. But when we look at something like the Russell 2K, and it's in this backup period after an SOS, it's trying to make those advances. Obviously you don't want weakness. Obviously you want to see strength. You want to see stopping power. You don't want bulls to just kind of give in for any pullback. But a lot of it's dependent on just economy and market on the whole. The uncertainty of elections is always going to play a big part. I know a lot of people don't like the elections the way they're looking this year, but that's coming up in November, and we've got a summer and a few months, and so you've got to, think about where would a run maybe happen in the midst of that, if it is going to happen, or if it doesn't happen, where would you expect us to consolidate at where we're at now or a little lower before elections? It would be strange for me to see this completely and totally turn around. I haven't really even done some of those targets. I think for IWM, the target was fairly sensible. It was like down here at like 180s. That was like the bearish target. So that was one, if like this does break down in a head and shoulder, it would make sense because there's a previous level here that could be checked. Has it been a minute? Sure. Do I think it has to? No. I think it's a pretty severe drop. It doesn't necessarily make a perfect sense to me, but that's my only real bearish outlook there. I mean, I can't really see anything else happening that would cause it to go lower for now. And otherwise, I think it's bullish, and I think it's setting up for the last leg of this uptrend. And I think it's going to be, pretty violent, a violent summer. No, I think it probably going to be a pretty strong, summer. And I think by the end of summer, late July going into August, a lot of these stocks are going to be much higher than they are now. Some of the targets that I got were, I think, I found them on AMC, but they're basically all the same. And I want to say it was like a window. Shoot, I don't have it on the chart right now. Where's that window at? It's not on my chart right now, but I'm like accessing my memory. And if I remember right, I think I said it was like late June through early August. July was like the kind of the middle month. But there was a pretty decent window there of like, this is where a lot of our trajectories are sort of pointing towards, and it was that window. So it's a very similar window to what we're seeing on IWM, and some of the other charts look the same as well. Hey, what's up? Yes, the hook is the master fractal repeating until you have a break. Yeah. So the master fractal is that the idea of like, I mean, you can think about the master fractal as just the all-time chart if you want. Technically, that's always true, because I know it seems silly, but it's almost always true because the all-time chart defines the way that security has been traded. And it always does. And unless the operators have like a major change, like a completely different operator, and they stop trading it and then somebody else steps in, that happens. But if that doesn't happen, then the all-time chart's always a pretty decent one to look at. But there's also a few that I call the master fractal that are really just sine waves. It's just a way of understanding accumulation and distribution as a shrinking iteration. And they always end the same way on the cat ear until they don't. And when they don't, that's where you get the change. For AMC, it's been down because they've typically always been ending with that distributive action. And we've seen times where we've had these massive up thrusts, but those are just like these guys on the big scale. You know, it's like when you see these huge up thrusts from like March and August, they're pieces of a much larger picture, and they're largely distributive. They didn't feel that way because you're running like 160, 180%. So it looks like it's dropped here. You see that big sell-off candle. So now we're getting the volume pick up, selling from about 3 or down to 3. It looks like it's selling from like 302. So our estimation of 304 has been good. To me, that still looks like the hinge right here. But we did hook a little lower, so we're going to see what happens. I see a double ear right here. So I'm actually going to do some stuff on this 1 minute. It's hard to tell what the heck this is, but I think this is the main platform. This gobbledygook just looks like consolidation, and there's a drop in reaction. You see that? So this is going like sideways, and then it drops and reacts. And then this is where your actual, it's a double top. This is where that support seems to be. Same thing here, there's double top. So I think if you were looking at this as like a falling action, this is where your two little cat ears would be on the 1 minute. And that's, as best as I could tell you, that's kind of like the middle of like an S curve. It could be, and this is where things get kind of dicey with iterations. Iterations means that there's like smaller versions of a larger picture. So what the larger picture would be if this is an iteration. So if this is an iteration, then typically what we see is that this is S-curve leg 1, and then you hit a leg 2, and this ends up being a larger. Does that make sense? This makes a lot of sense for getting down to 208, by the way, or 280, by the way. Because if, for example, here, let's just do it. Let's do the math. I'll show you what I mean. So let's say, for example, we think, yes, this is the two cat ears, so this is the middle of the S-curve. So then what you could do is you can take like, all right, that's the top of the flush. And based on our estimation, we're not like 100% positive. We think, I'm looking at like where the support is here. It's like right around 305. So we think that's roughly the middle of the S-curve. It's not actually on the ear. It's kind of like looking at it and just sort of figuring out where that's at. I can see a mark right here. It's almost 50% between the two. That's what I'm going to use as the middle. It's like right there. Yeah, maybe right at 305, 306 down to 305. It's kind of hard to tell. Anyways, so 295 ends up being that 50%. I would venture a guess, without even looking at it, because math is funny that way, that that's like near a fib level. And it is. It's like right around the pocket of the 786 retrace. Right there. 786 down to, well, it means a penny. It actually is the 854 retrace. So without even looking, I'm kind of like, yeah, that probably makes sense. And then what we're going to do is we'll say, okay, let's pretend, for example, that this is distributive. Let's just say, assume it is, and then look at where is the next one down. And you can see that if we draw 50% there, the next marker down is 275. 275. So if this is like a small S-curve that then builds out into a larger S-curve, my expectation would be that this is your main S-curve trend. This is curve number 1, and then there would be a curve number 2. So you'd have a small S-curve here, for example, that like breaks down. Again, I am running on the assumption that this could be distributive and just continue down. Okay? That's why I'm doing it like this. If you're wondering like, well, why can't it just break out now and go? You can, because once this S-curve is completed, if we think it's done, sure, like that could happen. And you could have, like I said, change a character anywhere beneath 304. I personally think that's still a possibility. If bears can't continue to push it down, they can't continue to push it down. My thought is, though, that you'd probably have a secondary S-curve here, and then this guy would end up breaking down, and it probably wouldn't look this clean, to 276. And you'd even have another one. I know it's annoying, but you'd even have like another little mini one right here. So there'd be two on either side. That's the iterative nature of it. So it's like one move makes up the first leg of a bigger move, which is sort of like two legs. Okay. Does 275 make sense on the bigger picture if these targets were to play out? Yeah, it does. Because 275, we were talking about this on the bigger picture, 275 is the spring action here beneath 284, this previous bottom. So does it seem reasonable to me? Yeah. Is there anything else there that might indicate that that is a strong place to stop? I don't know. You know, like this is where you can kind of go back and look and see where the bottoms are. There's a bottom here at 276. So I think that's probably it. You know, that's probably the main reason you would use this. There's a 276 bottom from back here. So that's an easy one to identify. Of course, this also looked like it was a kind of support before coming down. So it's going back, it's an aiming to retest that support going down at 275, perhaps. And then we can look at the overall picture here and see if there's a fib level. There's a fib at 278, I think. So again, that's the 618 retrace. You know, and then from that point, we could continue to like build it out, but yeah. Okay. Yeah, if I'm wrong about this, I'm wrong about this. It turns around, it jumps the creek early, it heads back up. Voila. You know, right now it looks like a pretty simple pump and drop. You're seeing a lot more on the 1 minute, on the 30 minute, you're seeing a lot more selling volume here on the whole. And that doesn't mean it has to go down. It just means that right now, if it's a trap, it's just loading up shorts. And if it's not a trap, then buyers are about to get squashed and shorts are loading up so they can take it down further. Wonderful. It's just volume. There is buying in here, you can see it, but I'm not seeing a whole lot of. I wouldn't say it's like super negative. There is stopping power, but I'm not seeing a whole lot of stopping power at 3, and that kind of bothers me because I get the dip this morning to like 291. What I don't really like is the lack of support again at 3. We hit some support there right around 299 on the way up, and now we're kind of meandering there, and there's not as much pushback. It looks like it's weakened a bit. Where's the creek? What price? Which creek? There's always like a bunch. So the one that you'd want to jump in order to see if we're going to actually advance is this red guy going down. It's pretty high. If you, as the crow flies, if you just went in a straight line up, it would be at like 320. Technically, we could coast along till Monday and not even hit the creek. And you know what I mean? So like locally, the smallest possible creek, that's just your downtrend always. And that's just the current downtrend. It's like right above us at like 302. But in terms of like making bigger moves, we would need to get above this particular red line and this particular yellow line. And that's the part that's going to tick some people off because they're going to look at it and say, well, you know, the example you gave earlier made it sound like we wouldn't get to that yellow line until it basically reaches the peak here, which is around May 21st. That's a triangulation method that sometimes works. Sometimes it's a really strong way to do it, and it does end up panning out really, really well. That's all I can tell you about that. This would suggest that May 21st roughly is where you hit 350, and then you would go beyond. But 100% determined on present price action and what happens with this red creek, because the red creek usually signifies the final creek jump before the bigger ones are going to happen. So like that's the second ear right here on the M cross, and that always determines like the downward motion. So if you're looking at this as if it's a sine wave, it's pretty straightforward. Like that's determining your downward angle essentially. In order for us to kind of jump that creek, you need to see, and I'm using the word creek the way I use it, you need to see it cross that red mark, right? Now the big creek, which is this pink guy here, I actually didn't raise it, but we did press against it where I have this little red marker. I think we pushed it, so it may actually be higher than the way I have it drawn, because technically once you make a higher high there, the creek has risen. And I've got it attached right now. I think I have it anchored to here, which is on March 27th. And then back here on the top that we had on November 6th. So there's that November date again. And November 9th was the day we dumped. That's the election day. That was really important for the overall kind of timing of all this stuff. So, yeah, like technically, here, we could do it the other way. We can make another one. It's 11:43. So I'm going to reset the first coordinate here. And then on the second coordinate, I'm going to use this high that we had, which was recently on like May 6th. So anytime you're pushing resistance, you're raising the creek in effect. So really the creek is higher than that. It's up here now. So again, as the crow flies, it's more around the 330s. And I was mentioning earlier 330 because usually with any kind of this creek nonsense, if you're having trouble identifying like, well, when might it just get to that creek? What makes the most sense? Well, what makes the most sense to me is sometime around an intersection between the creek and a support. Because in order for an algorithm to kind of satisfy both requirements, that would be the ideal time to get there. And at least in the past, I've noticed that, and this is why I talk about stuff like triangulation. In the past, I've noticed that seems to be the case often, is that you're triangulating to a specific region. And I would say give or take like a week, because it could get there slightly after or slightly before. But the intersection of like a support or resistance and a creek is a really important pivot point, because whatever happens there could determine the direction of the stock greatly. Hence we have this intersection here, which is really localized, but we have this intersection here that goes, and you can tell like it was kind of going to intersect around earnings. It wasn't obscure or something. It was a really simple marker right there. And so we knew that there was probably, when you have consolidation at 315 and you're going sideways, and then you have these creeks intersecting on the 9th, which is today, that's the day after earnings. It's kind of a given that that's probably going to be a really important pivot point for the stock, because you have to make a decision. Like the stock can technically just go sideways, but even if it goes sideways, it just jumped the downward creek. That's where the resistance was. That's where the sell-offs were happening. So no matter what happens at those intersections, they're always critical, And that's also part of the way that, at least for me, I've been able to say, all right, well, unfortunately, like the timing has changed a lot. Remember when we came down on the big picture and we dropped and we went like straight down and then we didn't make a V-shaped recovery? One of the things I said was that means that it could take years. And some people were like, what? And I was like, well, because you came so far down, if an operator wants to then take it sideways, it now requires that instead of taking like 2 months to get to the creek, it takes 7 months to get to the creek. And there's really nothing as a retail trader that you can do about that except just plan accordingly, because once you make that huge jump and that move, you're kind of left with whatever the setup is heading towards that creek. So you can't really, in effect, in my opinion, like there's not really a better way to do timing outside of just market events like elections or something. So the creek intersections have all been fairly important and easy enough to identify. So creek intersection plus a support and resistance. So like right here, I was like, okay, well, there's a clear creek intersection at 326. That happens on May 14th. So for example, if this were to go up and let's say it did hold today, it had a change and it jumped, you could see that this could easily reach that creek intersection there. And I know I'm doing it in a particular way that suits my fancy. It doesn't mean that it has to jump there. It's just that, sure, like I could see why that would be a really significant place for it to make these kinds of moves. Why do I even make that assumption? Because in the past, retrospectively, if you go back and you map out some of these moves, this is typically what's happening behind the scenes. Like there's almost like a grid of creeks and trends, and it's this filter, right? It's like a colander, which I think the algorithm is satisfying. These algorithms that are composite, they're all kind of getting satisfied. They place these orders in specific spots because they're testing liquidity. And I'm not going to pretend to understand all the mathematics behind it, but I do know that math tends to work out in the market. Like, and we were talking about this, we talk about these levels right here, and then we looked at it and I was like, oh yeah, that's a 786. So like, what reason would there be for a retail trader to stop here at 306? Like a retail trader is not going to sit there and like plan it out, but an algorithm might look at it and say, we're going to tease out this, or we're going to achieve this particular kind of goal to help track liquidity. And here's what we need to do. We need to accumulate sideways. We need to check liquidity here for X amount of minutes. And then we will have enough to advance this way, I genuinely think that's what basically is going down. And so mathematically speaking, like it typically works out that this is correct. And that it ends up hitting some fib level, I don't think is an accident. That was like calculated in the length of that move. So as soon as this move was over, the algorithm probably measured the strength of the move and measured where those liquidity spots were. And yeah, there were some that were hit early, like here, that were acting as supports that you may want to check going back, because you're like, okay, there were buyers there, we're going to go back down, or there were sellers there, we're going to go back down. But that trading methodology as we see it, it may not be that predictive, but it definitely is. It's like taking notes all the time, and that makes sense. And that's the idea of checking for liquidity. And it's based on the way that institutions traded for like 100 years, leading to the computer era. So where they're looking for shares, and they're doing specific things to kind of drive the price action that they want, right? To manipulate the markets. So I can't tell you, looking at it, that this is what the formula is and this is how it's determining this or that. But I know that it usually works out. So I can at least look at the evidence of it and say, yeah, this is typically what we see. That's just pattern analysis. So if we end up coming down, my thought is we're going to come down to like 295 or thereabouts, this region. We're pretty close already, And I said this when we were up here kind of coasting around 302 or something, that we probably would try to come down here. And if I'm wrong, then we'll see a reactive move earlier, and it's just a change, and that's good. We can just say, okay, it didn't pan out that way. So something in that algorithm, maybe it was a short operator getting messed up by a long, who stepped in. Or maybe it's just that that was the plan all along. But who really cares? Like, we don't need to know the answer to that. We just need to see the price action, determine the possible outcomes, and then have a plan. Move out of America. Well, I'll just say this. There is no answer to that that's going to satisfy everybody. So if you're all about communism and you think capitalism just caters to the rich, okay, but so does communism. So I mean, like, it's meant to sound like it's going to be this great thing, and then ultimately you end up with these. I mean, you can look at any. I'm not saying communism is the only answer. I'm just saying, like, the idea of inequality is not exclusive to America. That would be a really silly thing to assume. I mean, geez Louise, if you were born in India, you're in a caste system, you know, and oftentimes in that caste system that it does still exist, you know, that you don't even have the option of getting out of that. You know, I know things are changing, but just considering how long that's been a staple in like, for example, in India, which hasn't even been a country for very, very long, in that part of the world, it's like if you were born into a low income family and your family was this particular career or whatever, you're stuck. You know, there's no upward mobility. So say whatever you want about America, at least there's opportunity for you to change classes. You know what I mean? So like there's always going to be problems no matter the economic system. That's why we have so many people, I mean, and genuinely really smart people that completely disagree about which fiscal policies are the best. There's been entire books and dissertations and doctorates written on fiscal policies that are going to be the best for, you know, it's just, there's no easy answer. So while I do share your frustration, like, I don't like that. So for example, like where I live, I live in kind of like a poor, you would call it like a poor neighborhood. Probably. It's not like the ghetto or something, but I live in like a poor neighborhood. So like lower income people live here. Okay. And I have a nice house within that neighborhood. I'm not complaining. I'm not like upset by my own statue. Like we're fine. Like we're okay. You know what I mean? We're happy with what we have. We want to have we have financial goals to like advance in life as we get older and to hopefully better ourselves. And we have the ability to achieve that in America if we're smart, if we go about it carefully. But yeah, there's always like mitigating circumstances, like somebody could break a leg, you know, my son could get really sick or something, and then you're stuck, you know, $1 million bills or whatever in hospitals, and you're done. So it's not like just having a good financial plan is enough, but at least in America now, I could say, yeah, we have the freedom to build a financial plan and potentially achieve it. Okay? And I'm happy with that. Maybe it's not the only thing that could happen, but again, the fact that I have that is a freedom as an option. So we have that, but then it does frustrate me because if you look at like who owns all the businesses in town, they actually live in another town. That's kind of near where we are, and it's like this really ritzy place, and it's like $100 millionaires. I mean, it's millionaires who are either generational wealth or whatever, and it's not just old people. You might think it's just like old retired people who've built wealth over the years. It's changing a lot. Now it's a lot of younger people who have had really either really good successes or just great opportunities come their way, and they all live there. And what's strange is that in order to enter that, what's called a bubble, because that's kind of what it is, because they live in like their own world, right? And then they own all of the stuff in town. So there is still like that element of the rich kind of are the ones that own all the businesses, and then the poor are just kind of, we call it bottom feeding or whatever. I don't think it's that dramatic, to be fair. And like I told you guys I do martial arts, right? Well, my friend who owns the studio, the martial arts school, is not a rich guy, but he made the right connections and he's worked really hard and he's making it happen. He wants it to happen. So it's not the same as saying like, again, in like a caste system, for example, where like you can only marry into wealth or something like that, you know. Those are things that don't provide you opportunity for upward mobility, and America does. So I don't really feel like I'm not anti-America. I'm just going to tell you that right now. I do think there's problems, and it does kind of suck, and it does feel sometimes like you're in a bubble because you look at something like the market and you're like, well, crap, I have zero control over this. I cannot possibly control it. It's not possible. GameStop, that whole GameStop saga, that was the narrative, right? Is like somehow retail unified because of the internet and gained control. But I sort of argue that they didn't. And I think a lot of it could have been a pretty substantial ploy to just reinvigorate the markets with fresh meat, with fresh money. Because a lot of what followed is then just the absolute cluster. I mean, I don't want to use the R word, but it was just absolutely wrecking. Let's just say that with the W, wrecking retail for the next 2 years. So even in the midst of like what seems to be like a revolutionary thing, there is oftentimes a lack of power that maybe poorer entities have. There you go. So that's my rant in response to that. I'm not going to keep going on that. I didn't talk about politics. But you can't also avoid that. I think that's a sort of an error of thinking. It would be an error of thinking to assume that I could go to the stock market, and avoid politics. There's no one in the world that could argue that you could avoid politics completely in the stock market. It's not possible. Fiscal policy has way too much of an impact on the economy on the whole, and not way too much. It just has an incredible impact on the economy, and so that's what drives the markets. So you could even argue that politics drives the markets, you know, if you wanted to go that far. I think it'd be easier to argue that than anything else. But I'm not going to continue to float on those questions. It was an aside. We can have some asides. Otherwise, we're just going to sit here and I'm going to talk nonstop for hours on end about one little price action or the next, you know. I don't think anyone really wants that. So, no, Booksy, I just want you to continue to call out price targets. AMC's at $2.99 right now. It's testing this resistance. It's kind of having some success. It looks like it peaked over it a little bit. I'm not really seeing a lot of volume, but I'm also looking at a 1-minute chart. So that's that. I didn't quite reach the target I had supposed, which was like $2.95. I could be either just wrong about the target, or it could be that it's not going to go there. You know, I did a measurement based on a midpoint at around 306. So if I was wrong about that 306 midpoint, or off by like a penny, it's going to be off by a penny or two down bottom. That's just the nature of it. So I don't really care that much. It's between 317 and 296. It's like literally just a handful of pennies. So I feel like I don't know. That kind of a call out to me, I'm like, whatever. If it ends up being that that's the bottom, then we can remeasure it. And maybe that just means that there'll be a higher, or it just means we're not there yet. Not just being not patient. Maybe it means that 280 is instead like where we end up. But that doesn't, again, looking back, it's kind of like, okay, well, that doesn't really change anything. It's still exactly where we thought it might go if there was a lower spring area. It's looking like price action's kind of drying up today. I'm not really seeing a whole lot of volume come into AMC. It's steady. It's not bad. It's just not... I guess it's higher volume, than yesterday. I like the bouncing motion here. It still looks more cumulative to me. There's like less time spent in this low area. And if you look at the move that happened right before earnings, you can see there's like this big U shape. That's very distributive. So the fact that we're getting like kind of a bouncing shape is actually pretty positive. You see the difference, hopefully. This particular move right here is very like distributive looking because of it's not always the case that the U is evil. That's not always how it works, but a lot of times it is because the U results in like a new low. And this particular motion tends to be more distributive. So it's not always bad to see the reverse where you get kind of a nice bounce. You can think about like a ball bouncing. That typically is a lot more bullish. So, because it means the bottoms are being bought up fast. Does that make sense? All right. I haven't really looked at much else today. I kind of gleaned over everything else. I might do like one more overview and then I think we're going to call it a day because the rest of the price action, the day might be pretty intense, but it also has, I've been mentioning it quite a bit. There's also a possibility we don't get much until next week, much definite action. And I don't want to sit here if it's just sideways bouncing along. I've got other things I got to get done. So I'm relaunching my animation business again. I kind of took a big break from that for like 5 months or so. And then I'm going to relaunch it and try to work with that and get some, I don't want to say clients going. I don't really feel like that's the most important thing right off the bat. It's really just to refresh and make sure I'm ready to go. And I'm working on an animation right now that has a lot of cool like effects work. It's pretty neat. So I'm going back and brushing up on my effects, like water and smoke specifically. I have like water and smoke in this animation that I have to animate. And I've done those effects before, but if you don't do them a lot, you kind of forget. So I'm working on that. And then I'm also going through a book about meeting financial goals. And it's by this, I don't know if it's a famous person, but it's by some guys, and it's kind of like any financial system that you might have, financial goals system. They all have pretty similar ideas. What I like about it is it's really straightforward. So I'll let you know if that's a good read, but I've been working through that book quite a bit, and so far so good. I really like it. It's really just about goal setting and then how to work towards achieving those goals, and then like changing. It's funny, we were just talking about this. Changing kind of your financial status over time, wealth building essentially, or if you're not interested in that, how to maintain your financial status. Because some people are hippies and they just want to travel around in a van and stay light and agile on their feet with their financial situation. They just want enough to survive. And it's a way of like, it doesn't matter what your goals are. It's like just a way of building a system to help you achieve what you want to achieve. So if you want to travel a lot, then they don't tell you like, oh, you shouldn't do that. It's just like, here's how you can goal set. Here's what you'll need. It's pretty cool. So I'm excited about that. I'm working on that too. So I got a lot of stuff going on. If it doesn't rain today, I'm probably going to mow the yard too. I got to mow the backyard. It's like a jungle back there. I ran out of gas the last time I was mowing, and I didn't want to go to the gas station. I was being a little bit lazy, not going to lie. My gas station's really close. I could be there in like a minute. I just didn't want to go. It was like hot, and I was like, I'm done. I'll just finish later. So, yeah, I'm just kind of glazing, looking through these. I'm trying to decide what I want to talk about again. I don't think that there's much new to say on IWM. I sort of mentioned that if we see a cross here, we're sort of getting that on the 1 hour. We might get an extension to a new high. I don't think it has to go this high to 208. It could just be a gap fill or something. Here's my thought. I think if we make a new high and the RSIs come down a bit on 1 hour, my expectation is, here's what I think is most likely, as I know we could look at 4 hour and stuff, but I think we're likely going to see a bigger retracement back down. We've left some gaps, and I don't know if we can run really well until we get a solid retest on 200. That's a really important level, and we didn't test it. We just jumped it. So it would be a really good place, is what I'm trying to say. It'd be a really good place for us to come back down and retest. If the market is strong enough, we won't do it. This is, of course, an ETF, and an ETF is a tradable entity, and so therefore it often will trade a specific way, but you have to remember what an ETF is. And so when you're thinking about it, you have to remember that it's comprised of pieces that, are moving and causing like this whole thing to move a specific way. So like when you think about it that way, you're like, oh, well, does it really have to fill gaps? No, they usually do, but it's again, it has to do with like all those underlying entities cause this gap. You know what I mean? And it's being traded actively. It's complicated, but like that's important to note. I guess what I'm saying is, in my experience, and especially we've looking at stuff of the last few years, most gaps do fill, but they don't all fill. And I don't think it's one of those things where they have to. It's unlike like an individual security, which typically will fill a gap at some point. That's not really the case. If you go to like SPY or look at the Russell long term, there's plenty of gaps that just never get filled. They probably won't ever be filled in their lifetime. So I'm waiting to see what happens. I think we might breach 206, and then if it's a divergent RSI, my expectation is as soon as that breaks down, I think it'll probably drop and head down to a new low point. Maybe we're going to see it like 201, but I think it'll head towards 200. MPW is one that I've had on my list, and I've been watching it pretty carefully because I'm invested in it. I understand this is not everybody's cup of tea. It's a REIT, which is a real estate investment trust, and so you have to understand like it's in a different sector than a lot of stuff I look at, and that might sway you one way or the other. I really like this chart all time. I think it's a super strong chart. I don't find a lot of problems with it, I guess is what I'm trying to say. Like, it just seems like it's in a place where if it can gain its footing, it's probably going to go flying. And long term, I can see it coming back up to like $24, and we're sitting at like $4. So if you're talking about a trade that's similar in terms of like distance traveled to what we're talking about on AMC, but that's not AMC, this one's actually really similar. It's sitting at a low, like a historic low. It's not the lowest it's ever been, but it came down here during COVID, and when it finally made its move out, it went right back up to like $12. And I'm not saying it's going to be 1-to-1, but there's a massive widening here. There's a big RSI divergence in these bottoms going down, specifically the last two major bottoms. There's been some really strong divergences made on RSI up to the daily time frame. It's got high volume in the lows here. Could it be distributive? Sure, but for me, it pays a good dividend too, so it's a good one to hold. And I think this is way undervalued as well. So like it's trading well below its normal value. This is one of those stocks that just, I can't ignore it. Like it's 200%, 300% kind of returns potentially over the next year or so. And I find that to be really attractive. It reminds me a lot of like NU, because NU was like historically trading really, really, really low, and it's a really good stock. And I was confused, but that's, the nature of a stock that's fundamentally really strong. and it's undervalued, it has a potential for some pretty huge upside. So there's a widening here. That's also a technical trade. So the widening, if it breaks out, should head back to where the widening began, and that's really high. That's like 24 bucks. So that doesn't mean it happens immediately. I've got trajectories drawn out, and so it's a possibly really long wait. ChargePoint's just one that I've been monitoring mainly because I like the stock for long-term returns. I think it's going to head back towards like $4 or $5 within the next several months, and that's really good returns. I don't know longer than that if it'll end up being more like 8 to 10. I think it's got the possibility of getting all the way up to about $6 as in terms of like a high point. And I don't know after that. I think after that it's going to be a question in my mind if we were to get there. So I don't want to make it such a long-term prediction that it's not possible to know. But I do think it's really close. It's kind of moved into a place where it's pushing creeks now. It's jumped the creeks. It's got a potentially really strong reversal in play as long as it holds support above roughly 157. This could be a really, really big move coming up. So very low cost of entry for this one. And then we talked about GME already. That just has been in a pullback period, sort of sideways and slightly down. Not much to say there. I think it's going to go back to about about $15 potentially. That's right around where it would hit the trend that it would need to catch on to stay sort of maybe what I call hyper bullish. It could technically break below that trend and be okay longer term, but it just might take a while. So, and then AMC, we've been watching it. There's not much to say on AMC just yet, and I've been much more to say, just yet. Nothing new since what we started this morning. I was very quick to just point out that this is probably a hook because it is a breakdown of the trend. It's on the end of a cat ear, and unless you see a reversal that goes back above this yellow line here, which is the bottoms from roughly, I guess, April 16th through May 1st. Those two bottoms are going to be tantamount. Like if it can come back above that, it's probably on the go. It's going because that doesn't usually happen unless there's been a reversal. But before you get to that point, you're going to cross the downward creek, which is now the current bear trend. And that's going to be the one that I think causes the most problems this week. If we do go sideways, because there's no breakout at all this week. If we go sideways, it could just coast into $3 on Friday, and then we don't get any kind of move till Monday because there's enough space there that could happen, if that makes sense. So there's a huge amount of space to sort of sit around and do nothing for the next trading day or so. In the event that we head down, I already kind of marked off 304 and lower as a possible change of character region. Right now we're sitting beneath that. This is where that change of character I was saying it could happen, and it could happen right here above 295. I've got the bearish scenario drawn out, which has a price target, in my opinion, of 275 or 276 rather. I think that's going to be the next one that gets checked. It makes sense to me that it might come down that low on that move, and then we'd have to wait and see if it crosses the red creek. I can't tell you exactly what the price will be because we're not there yet, but you have to remember, like, this is a previous floor here at 284. So in my mind, it's like if it drops 284 and it heads to 276, what needs to happen? It needs to recover back above 284 and then find support on 284. So even if you don't know where the creek is, you still should have an idea of, okay, that's where the rubber's got to meet the road, right? It has to make that move regardless if it's crossing the creek or not. And if it doesn't, you haven't moved. So like you haven't reversed. I think there's a possibility that this does not go down to the lowest possible point. If we're looking at just the combinations that we've seen in the past, like the setups we've seen in the past, the patterns, this is very similar to March. And what happened on March 4th was that we finished the second cat area and we dropped. And there was another bounce lower. And then like beneath the trend. Obviously, there was a bounce lower, and then we went low. And you could compare that to what happened in that shallow S curve before the big run in January. The fractals are really similar in how they kind of finish, and then how the spring sets up. And the spring had like a quadruple flush at the bottom, near the very bottom. So that could be either 240 or for us around that 276. And if that were to happen, you get that quadruple flush and then it starts an ascending accumulation. You're just waiting for it to jump the creek and then it's going, because that's pretty much how it happens every time if it's going to go. The good news is that a spring typically doesn't take more than like 9 trading days. It can take up to 12, which is a lot. I mean, it's almost 3 weeks, but for the most part, I would say 2 weeks is a better gauge. We've had very few that have taken longer than that and very few that have been shorter than that. There's almost always about a 2 week, let's say 8 trading day window, 8 to 9 trading day window of bottoming and accumulating and then taking off. So, you know, we have some metrics that we can use to measure that if it happens. We have ways of sort of seeing where that could build out. We know that there's a possibility that that build out here could result in, you know, a lower slide. And so you've got this kind of wedging action here that could end up building out into a drop before a reversal. We're not there yet. So it's really just me. If we're doing that, it's really just me trying to predict something that I'm just not sure about, and that's not really wise. It's kind of a silly thing to do. I'm bullish. I know I was bullish last time. I've been bullish on this whole way down, but mostly because I just think that AMC's forming out at this point. I think AMC's finished forming out, I should say, a very important pattern that I call like a master fractal, and I think it's basically done, and this is like the last steps. And I'm just waiting to see where the bottom is. But I think as soon as that bottom is in, so whether it's here, here, or here, or lower, and I'm not going to say it's out of the question. I've got like 3 or 4 markers down. I think it's it. I think we're going to really, I believe we're going to reverse in a really, really strong way. So I am not going to change my mind about that right now. I have no reason to change my mind about that right now. I've seen it enough to know that it's kind of coming to its last options here. I know there's folks out there that are going to just be ridiculous bearish, and they're going to be like, no, it doesn't matter. He's going to announce like an offering. It's going to drop to $1. We're going to reverse split, blah, 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 blah. Okay. But given everything that we know and given the technical setup, I can't find that target outside of a full-on S-curve, and it could be presenting itself that way, but oh well, you know, like that's where I'm at right now. So, you know, I often have been accused of being bearish too early, and then eventually it happens. My hope is that I'm being bullish a little too early and then it happens. You know what I mean? Like a little bit too early and then it happens right after, you know? I'm okay with that. I'd rather be a little bit early to something than be completely and totally off. So this is not a little bit early like back here, and I already knew at this point it was probably going to come down to 6 when we hit that head and shoulder. That sucked. I remember that. This one was a lot more confusing for me, but I still thought it was distribution because of those 2 tops. I just didn't like that very last fake out. I remember that being kind of like, it was like 1 minute of it, you know, where we jumped back over the creek and then it dropped. We don't want that. But this to me is very different, this setup. I feel really good about it. And I would be interested to know if Stockfather feels the same way. I think he's still attesting that we get on at 160. But he's not completely wrong to think that, because we've been in that downtrend. And, you know, that's the other thing is like, I do a lot of things that a lot of people think are fancy pants. I don't think they're fancy. I think it's just basic sine wave analysis kind of stuff. But other people look at it and they're like, well, that's fancy pants stuff. the simple matter is we've been in this kind of downtrend and we haven't left the downtrend. So if we haven't left the downtrend, why are you thinking it's going to suddenly reverse? Well, every downtrend eventually reverses. Yeah, and it may just be that we need to get to that spring first for liquidity purposes, but I really think we're about there. So I'm going to just stick with that. Yeah. Local price action today. If it stays above $3, could be a little bit stronger. I still think this could be working out a very large S-curve to the downside, so you got to keep that in mind. Even though it did jump this little local trend, it doesn't mean a whole lot to me because an S-curve would jump it and then drop down to meet it again. Same thing happened like here where it like jumped locally a little downtrend and then it drops to meet it again. So not out of the woods yet there. It's at 297. My price target was 295. And then the main thing to remember is that in order to get a substantial reversal, if it continued to jump creeks and it makes a real bottom here, let's say, for example, it makes a bottom, it doesn't look like it's going to do it, but let's say it makes a bottom at 295. You can always use like that 50% method and see if that helps to determine where you might need to go on a rebound. It's pretty high, at this point. It's way up here around 320, which is kind of the number we were talking about anyways. The longer we take ourselves away from the yellow line, the higher we're going to need to go to get over it. And I already mentioned it early in the stream, but I'll mention it one more time. This often correlates to where you kind of meet the top or near it. So it would make sense for me if sometime around May 21st, give or take about a week, maybe more like 3 to 4 trading days, not a full week. I think that area, to me anyways, makes the most sense as a possible exit point. It could be a little bit later, but a lot of times that it's kind of around this area, and it makes sense to me as to why that would be. It may not make sense to you, but it's kind of setting up a larger move, right? Like that's where a critical support and resistance line would be. And it is very critical. We've been chopping into it for days now, going into earnings. So this particular trend and then the level at 315 now have a whole lot of trading along their borders. Like they have a lot. Make sense? Well, I'm making the argument, Michael, that this is a potentially very large bottoming structure. It's got the right markings for it, in my opinion. What needs to happen, though, is liquidity has to do with liquidity. And those are the questions that are harder to answer. But I would genuinely assume that because of AMC being what it is and having as much short involvement as it does, that we probably are going to need a spring-like action. And I know you guys are frustrated and you wanted to see it kind of drop and run. And I know that would have been really great. I don't feel like this is way out of left field at this point. It seems to me like fairly consistent with what we were expecting. So yeah, I find this to be fairly reassuring, knowing that this was a very strong possibility, that these targets are panning out to be right around where we want them to be. I think what's annoying is the loss of, income. So yeah, it can be very soul draining. I think that a lot of the stuff that you want to pay attention to is just remember that you always have the ability, some of you don't have the same abilities, but you always have the ability to help your own trade. Like you don't have to go all in at the beginning. You can have stop losses and get out and then re-enter later. You can also, if you have the ability, you can hedge, I personally like hedged this. I got long-term leaps here, something that I can average down, and then I got short-term puts. And I'll be honest with you, my short-term puts are looking just as bad as my long-term things. It's odd because this was a bit of a volatility crush, I think, on these double flushes that happened. So even the bears aren't exactly winning out right now on this one, you know. But mine was for like 250. So if we get a substantial drop down, my thought is it's probably gonna change, you know. And I got 250 puts. Playing puts on AMC used to label you as like a shill. I personally don't exercise those puts by selling my shares. I usually just sell the position again. Puts and calls are not going to cause a squeeze. Only shares are going to do that. So for me, like long term, I'd be looking to average down my position. So if I make money on a put play, for example, I can either average down on my calls, my leaps, which are for 2025, or I can add more shares. So I see it as a bit of a win-win. I don't think of it as like I'm negative on the stock forever. I think of it as, okay, well, it didn't exactly explode the direction I wanted to explode. I've got a hedge in place, and in this case, it's not really paying off because it's been shook out really bad. But maybe next week, because it's still a week or so out, you know, maybe next week it improves. And those are things that you can decide up front, like how do you want to play this so that your soul doesn't get, as Michael says, your soul doesn't get drained, as it were, because it can be very soul draining, right? I don't disagree with that, you know. I think it can be very, very tough. And then also just diversity. You do not have to play just one thing. You know, I've been trying to introduce other stocks that I think are good plays. I don't know for a fact that the things that I pick out are going to play out, but I do know that if I think they're good, I'll talk to you about them and let you know what I'm doing with them. You know, I've pulled out a few or more, and some other people have mentioned some that I've picked up on. I like the NNOX play. I think NanoX imaging is a decent chance to the upside. I'm up 8% on that position. It's just a share position. I didn't buy that much. I only bought like, I don't know, 30 or 40 shares or something. But, you know, I make money on that. That's not the end all be all. I'm IWM, I'm up. I got exited some calls during this big run up, you know, that were up significantly, like 160%. I'm going to just go ahead and exit some. The ones I have left are still up 121%. Like I could get out of them. I'm waiting to see if we have a breakdown again, and if we reverse, you know, then I might just exit and re-enter. But I got a really good deal on them. So it's like I have other options that I can choose to, you know, how I want to play this. That takes my mind off of things like AMC, which can be very frustrating. And it is a frustrating stock, and you are waiting for something that feels like it may never happen, you know, waiting for a train that don't come, you know. And I feel like those are things that for me personally, they've helped me to like not be as concerned with AMC. Like I keep my positions kind of light on their feet for AMC. I recognize that this stock has a tendency to wreck people on the put side and the call side. You got to be patient with it. You know, there's always opportunities to like kind of mitigate losses, but at the end of the day, like you're here to make money, so avoid losses. You know what I mean? Like do what you can. Don't for the longer term hold positions. I don't really think there's much to say except that you should have in mind like where is a good value, and if having the ability to purchase shares under $3 is appealing to you, then that's where you can be purchasing shares. And you know, that's your choice. That's how you're trading. You're buying and holding. You're averaging down, whatever it might be. That's how you can trade it. And then you're not worried if it's sort of sitting beneath 3. It's just an opportunity for you to accumulate. And then when it comes above 3, you've got it loaded up. Well, that's a financial decision, you know. You're buying an asset, and that asset is either going to give you money or take that, or it's going to lose money, and therefore it's not an asset, right? At that point, it becomes a liability, and that's your choice. So I guess what I'm saying is like, I don't I don't come on here and talk about AMC because I think that now is the right time to buy every single day. It's not. I would not have advocated much of anything during this period, and I didn't. I said what I said, which was I think it's going to sit around 315 for a week or whatever, and it did. You know, and that's not me being like braggy. I'm just saying that's not really an opportunity to do much of anything. You can either accumulate positions or you can just sit there because there's nothing else you can do. There's no confirmations. You already all know this, but I guess my thought is that like I'm not like your spiritual advisor or something. I can't tell you how to live your life, nor would I ever assume that you would even listen. But I will say that you can't have your heart like too wrapped around money. Money is neutral. It doesn't inherently do anything evil. It doesn't inherently do anything good. It's how you act on it and what people do with it that determines, you know, whether it's kind of good or bad in the end, the result. But oftentimes it defaults to kind of being a greater evil for people because it represents like security. It represents like long-term security. It represents short-term security. It represents a life that you might want or think, you know, the ability to get things that you need. And it's not always just about wants, sometimes about needs. But if at this point in the game, like whenever AMC's dropping, you feel like you're upset because I'm not saying this is you, by the way, Michael. I'm just saying if you're somebody out there that feels like you're upset because your security's at risk, I would just say that you probably shouldn't be placing your financial security in the hands of a movie theater company. You know, like your personal well-being should not depend on a movie theater doing well, unless you own that movie theater and you're, you know, you're the manager or you own the movie, you bought it and you're, you know what I mean? Like, unless it's it just seems strange to me at this point to sort of still hear a lot of folks are just like, they tied up everything they had in it. And I'm like, well, I can tell you what I think. And what I think is, you know, what I've already said, short term, you're probably going to see eventually it come back up to 12 and then possibly we see a bigger move, like a second move, sort of doubling that, right? Up to maybe the 30s, maybe to that gap fill at 40, but I'm inclined to think that it may not get there when we think it does. But other than that, like that could be really soon, like within the next couple of months. I only have a small window, and I really don't know if it doesn't make the move between now and August, I don't think it makes the move until after November. So that's a whole nother window, right? And it's a waiting game. And then beyond that, and I said it at the beginning of the year, and people did not like that, and they still don't like it. I said, I don't know if this thing moves till 2025. I don't know if it moves till 2026. It looks like a really huge amount of time could be spent in this lower area. And they're making money lending out shares. Institutions are making money lending out shares. They're making money shorting. They're making money buying. They're not putting all of their eggs in one basket. So they don't have an emotional attachment to it in the way that a lot of retail does. And that emotional attachment to it is what's causing like the strife, you know, if you're feeling that. They don't have that. They don't share that with you. So they don't care that you might have that. They can see this like as a really long-term play that's like 2 or 3 years out. And that's the way they would look at, a lot of institutions would be looking at it if they're buying. It's like in 2 to 3 years, this is pay off. And they've got dozens of those investments that are constantly maturing and that they're able to exit out of. That's how they're making money. I mean, that's how they make money, right? And then a lot of these are hedge funds and they're making money hedging against market moves, you know, so that when the market's in a downturn, people's accounts, people's 401ks and junk are still growing. That way people who are investing with those companies, those financial companies, are still doing well. Doesn't always work out, but we're not institutions, is what I'm saying. Like, we don't have that luxury. So the only thing that you can say about, if you're a small-time trader, the only thing you can say about it is like, you got to set your own personal goals here and make sure that you're not tying too much money up, at least more so, into something that you may not want to have your security based on, if that makes sense. So that's it. That's all I'm going to say about that. And I'm not saying you should take that advice. I'm just saying that that's how I feel about it, and it's kind of a common sense bit to it as well. And a lot of the folks in our AMC community are still kind of stuck in sort of a limbo, like a purgatory, stock market purgatory, where you're sort of waiting to see if you're going to be justified in this purchase. And that's a hard place to be, man. There's a lot of anxiety there when this is taking forever. So, yeah, that's why I'm trying my best to kind of like help us as a community, for what little community I have here. And you guys are awesome. It's not about that. It's just, this is where we are now. Like, we're all here listening. Help us to sort of find other ways of, not necessarily this is going to be the best play ever. Maybe it doesn't work out, but at least finding other securities that look good for us as a possible money-making option, with decent cost of entry and decent chance of return. And we're looking at big picture stuff as well. And there's ways of making money here, clearly. So, nice rant, Booksy. I've been thinking about it. I think I might write a book. Not because I think I have a whole lot to say. I mean, it wouldn't be like a self-help thing, but more like a narrative. Because I think I have some. Everybody has unique experiences, but I have like some things that I think about all the time, like ideas and like concepts, and like I think it would be really good in a story. I don't know. Maybe one day. Yeah. So 95% loss sucks. Yeah, it does. I think my losses are about the same on the whole from early days holding, but it's mostly because of those reverse splits. I mean, like, my averages weren't that bad. The reverse split really hurt. The ape creation really hurt. And then that reverse split hurt. So nothing about those two experiences helped my average, unfortunately. And I did buy some ape. Like, I thought about how that might average in. I bought some ape low, but it is what it is. I mean, if you are in that position, you can choose to average down, or you can just bite the bullet and wait. There's really nothing else you can do. And honestly, like, averaging down is really overrated. You hear people say it a lot, but a lot of times, I don't want to make anyone scared, but a lot of times averaging down is just a fool's errand. Like, you'll never kind of catch up. And some of these stocks, which have been pretty big loser stocks, meaning like they just kept reverse splitting and this and that. I mean, geez Louise, you could have been averaging down every single time it dropped, and you would just never catch up because they just keep reverse splitting and they're going down and down and down and down and down, So, yeah. it's not a great trading strategy, I guess what I'm saying. There's very few times where averaging down is good, and it can help. I'm not saying it can't help, but it has to be, it's very like, it's kind of like the spice, like you want to use a little bit, but it's not the meat of the play. You can use it a little bit here and there to kind of help you along. Maybe more like a garnish even. But it's not always the best policy, First, you learn how to cook and cook things right, then seasoning becomes really important. If you just season, but you never know how to cook things right, people are going to get food poisoning and die. So it doesn't matter how much seasoning you put on it. I don't know. That was a dumb example. Good anecdote, Booksy. That wasn't even an anecdote. It was just a metaphor. Good words, Booksy. Anyways. He's still diluting. I'd be shocked if we go up by much. G might help us if we find a higher range. I don't think there's a massive crowd like before. Oh, there's not. It's evident in institutional ownership. I remember early days people saying like we owned 99% of the float or something. That might have been true. But just owning the float and holding those shares does not cause the stock to move. And so if then you just have almost like an agreement amongst institutional traders that this is going to go lower, it doesn't really matter. People can hold all they want while the price is falling. Nowadays, I think the number's more like 30% institutional ownership. It's pretty high. So remember the game of the operator. We talk about it quite a bit. Their goal is to get shares out of retail's hands, like always. So has the operator been successful in doing that? And I know I'm using like facts and figures that I can't support right this second, but I'm just telling you based on memory. If, for example, and it was true that we owned 99% of the float at one point, the fact that we only own like 70% now means that the operator was successful in their plan. Very successful, I would say. Is there some kind of a point in which the operator says, I'm good, I own enough? I don't know. Maybe their drive is always to own more than 50%, but I don't think that's the case. I feel like they don't need to own 50%, especially if there's a lot of people buying and holding. As long as they own like a majority of, like, let's say it's a bull operator, if they own the majority of the shares left, they can wreck the short operators, you know what I mean? Like, in theory. So those are kind of questions in my mind that I don't feel like we're going to get real answers to. We know that the filings that have been made, there's a lot of institutional ownership now. So I think that's kind of been a big point for me, is like, well, that's kind of always been the goal for the operator. If you read Wyckoff theory, they're always trying to get the most shares away from retail. So they were successful in doing that. Maybe it didn't go the way they wanted it to go because Adam Aaron did some weird stuff, so they had to change their plan. But I think they took advantage of it. Yeah. No, I mean, honestly, Ape was the big thing. I think Ape was the thing that turned the tide. And that's why I think all the stuff that happened surrounding Ape just felt like a huge slap in the face to me. Because as soon as it happened, I was like, wait a minute. Thankfully, nobody could say otherwise about me because I never changed my mind about it. But I knew like initially that was probably what was going on. I attributed it to the vote, and I said that the idea that retail was not buying Ape, but was selling it, and then that people were like advocating that you sell it, like big name people on YouTube were making cases about it, about how we should sell Ape, and like almost everybody, at least at the time when I was on the Twitter thing, almost everybody at that time was like, I'm not going to hold my Ape position and this and that. I mean, like, I just remember that being such a big deal because I was like, to me personally, because I was thinking about how, man, if everybody lets it go, we're going to end up with institutional voting power that we can't possibly get out of, And then the fact that he used that ape as a bargaining chip, because the fact that ape was so painful for people was then used as a bargaining chip to get his way and have it converted. Now all those institutional votes that were bought for cheap are converted back to regular votes. And I'm not even the least bit surprised that that whole thing involved ended in a reverse split based on the way that he did it. And his argument being that like it was coming back to a similar value, but like we all know what happened to our bottom line, like in our accounts, and just getting absolutely massacred. So yeah, I'm not at all surprised that institutional prowess took over and drove the stock down, and then we've had massive amounts of institutional ownership changes, and it just doesn't. I mean, it's almost like a nothing burger. It's kind of like, yeah. I mean, that's what happens when you screw over retail 3 times in a row, and like repeatedly do things that bring in more institutional investors. And I actually think that's probably why another part of the reason why Ape was introduced was to try to create an attractive environment to get in. He attested that he didn't think that Ape should ever trade below AMC. He thought that they should be like the same value or something, which doesn't make any sense because there were more Ape shares than there were AMC shares. So yeah, that's it. You can't even talk about this on other channels. You're deemed a shill. That's why I'm here. Yeah. I don't know why you wouldn't be able to talk about institutional ownership and how it's affected AMC. That's strange to me. If people really are like talking like that and they're being called a shill, that doesn't make any sense. Like, it's like playing a baseball game and only talking about your own team and like never talking about the players on the other team. Like, why would you not concern yourself with who's pitching on the other team? You know what I mean? And that's just a baseball example, but like any sports analogy would do. Like, why the heck would you not think about the other players? It just doesn't make sense to me. Like, and they're not even all on. It's funny thing is like some of those institutions. I know I'm raising my voice a little. Sorry. Some of those institutions are not even. They're not even on the other team. That's the weird thing is that they're not on any team. It's like they're on their own team. They're doing what they want to do. It's like they're switching sides when they want to, and then there's a few that are actually on our team. Like there's institutions that are just buying the stock because they think it's a good value. And they've been waiting to see when it becomes a good value again. And they weren't interested when it was $70, but they might be interested when it's $250. Why the heck would we not be able to talk about that? So, yeah, it's not. Yeah, you're right, Kant. Some debt holders exchange shares, but they could have easily have just sold those shares off. We can't. I can't keep up with everybody's, like, I know that the filings are there, but I can't keep up with everybody's buying and selling, like all the institutional buying and selling. Maybe it's something that we should do more, but I would say that for the most part, those offerings, if they think that it was valuable at $8 and they're like, sure, we'll take that, and then it starts dumping, they're probably going to just let their shares go. They've got people that trade for them or whatever. They're not going to just hold on to that investment. They want to keep the investment. So it's different than like an institution buying at $8 and then lending out their shares but never selling their shares, because that to me tells me that they may be And I guess in an offering they could do that too. It's not like they have to sell, but like that might be more of a tactical move that you then see eventually it comes back around to that price, so they make even. You know what I mean? They're not interested in short term the loss there. They're just looking at it as a way of, they're just buying like a cow to produce milk, and they know that cow is dying off or whatever, but they're going to end up selling the cow back at the same price or slightly higher a year later, even though they've used it up. So yeah, there were a few people early on, and I don't really talk to much of anybody anymore because I'm not on Twitter almost at all. But there were a few people early on. I remember, and nobody, like a lot of people, I never really felt like Colin was like a bad guy. Y'all know what I'm talking about, like Colin Gladman or whatever. But a lot of people didn't appreciate, I guess, his candor, the way he spoke about things. But like, he also sort of jumped off the AMC train, but he was really quick to point out the ape problem, which was like, hey, this is a method for dilution, and ultimately it can affect how the stock price is going to be perceived down the road. And he was right. And I think that that's okay to say that, like that there were other people out there that did talk about it, and a lot of them were labeled shills or whatever. And even at the time, like, I wouldn't have necessarily agreed with everybody about the present price action at those times. Like, we all had different ideas. But there were a lot of people who didn't like the idea of ape early on, and then they were labeled like bad guys. And then later they were like, oh yeah, they were not wrong. You know what I mean? Yeah. So it's noon. That's usually when sellers take over during the downtrend. These kinds of things, again, I was mentioning like the possibility of an S-curve. It's just not positive about it, but it looks like I was pretty close. Pretty close. So we'll see. Maybe we'll see if this can hold a higher high or double bottom. A double bottom here with a flush back all the way back up could indicate that we're in a bottoming, and that could be really strong. So if you do see another flush today and it breaks this idea of an S-curve, that could be really positive. But otherwise, this to me would just be an S-curve down to like the low 284 area. That's my thought, okay? So just one more time, if this happens to have some kind of another flush today at a higher low and it really flushes, it could be a massive shakeout either way, but I'd almost feel a little bit bullish about it because it's an unusual place for it, and I would think that could be, oh man, I hate that though, because then you're like, well, what about the Friday thing, Booksy? You said maybe into Friday it just sits there. It really just depends on where it finds support, I guess. It's still like the same question of like, it has to be a support over 304 or something, but it could get interesting. I don't know. Let's just leave it at that. It's more of an open door question. Otherwise, I'm just going to go ahead with this concept that we may just coast here, form a, this is probably like ear one or something, and then we're going to end up doing a second one beneath here and then drop. Yeah, there seems to be consistent selling now, and they're pushing through $3. So if $3 isn't going to provide support, and we're already down 7.5%, if $3 isn't going to provide support, there's really no reason to think we wouldn't go down to that 284 and then 276. When BRICS destabilizes the dollar, we'll get that black swan we've been waiting for. Maybe. There's been a lot of there's been a lot of potential like catalysts. So we'll see. You know, some of those have been sort of okay. Like they were kind of right. But a lot of the thesis that people had around share offerings was that it would be a catalyst as well, and it's not really proven to be one, not in the way that people timed it out. So, yeah. I'd be happy to be wrong about this S-curve, though. BRICS event in Russia, all the players attending. Maybe, yeah. I hope Russia stops. Yeah, if Russia just magically was like, you know what? We're going to stop being crazy. And so China, I think you'd see a lot of market reaction to that. Yeah, backed by gold. Well, I'll say this. People in the 1970s were told and urged to get gold because of inflation. And then, I'm not sure if this is the point you're making, but it's just something I was thinking about. People back in the 70s were told to get gold. And if you look at the 70s going into the early 80s, gold just got trashed. And sometimes it's like you're too late to the party, you know? Yeah, we'll see. So I guess what I'm saying is, like, I don't know if that means that it could be like the opposite of what we're expecting, like the topping off of whatever. Is that sort of what happened in the 70s going into the early 80s? Was everybody was like loading up on gold, and then it ended up kind of reversing pretty badly. All right, we'll see. We'll see what happens. I'm not anti your idea. I'm just thinking about it. I wonder how many shares AA has himself. No, I mean, he's talked about his position. He says he hasn't sold anything, but I think insider traders have to tell when they sell, so you could probably check it. Yeah. You probably could check it out. All right, y'all, it's noon my time, so I'm going to head on out and get some lunch. Thanks for hanging out on the stream. I'm not too surprised by the price action. Just kind of waited out. And I've said it a few times, but I do think it warrants... I really haven't been doing a lot of update videos. I really want to just do one. I'm not particularly bearish on this still. I know that it seems bad, but I still think that sometimes the downward action is good. So I'm just going to leave you all with that. I hope you guys have a good day, and I will talk to you all later.